Good morning. Good morning. Here, please let me know any name that I can know that whom I'm talking to. Please don't forget to push the like button who are joining right now, right before they start. Thank you, Arif. Thank you so much. Morning, card lover. Cardo lover. How are you, brother? I think long I don't see your name or absentee here, right? Who else is here? Come on, guys. Give me some name. Okay, Wenel is here. Good morning, brother. Okay, Wen. Thank you, brother. Can you please tell me where you from? That I can remember later that okay, this guy is from there. The guy who was absent, he was not here. I can know everything. Please let me know where you're from. I'm good. Following silence. Oh, okay. That's cool. But I thought that you were absent. I didn't see your name for a long time now. Come on, folks. Give me some more name. I can see 23 people watching, 8 likes, and just 3 comments. I need more names. I need more likes. More things. Until then, I'm going to stop talking about the price. Would love to spend some more time for knowing the people who are watching us. Well, you're from Florida. How many people are from Florida? A lot of people. I think Sophia is also from Florida. Florida. A lot of people from Florida. Oh, good morning, Suzivan. Thank you, brother, for being over here. Suzivan, were you with me last PM session live? Were you with me last PM session? I mean yesterday. Good morning, Yasin. Thank you, brother, for being here. Uh, Mary, Marie. Mary, can I tell you? I mean, can I ask you, Mary? You also from Florida? Come on, man. My life is full of Florida. Come on, man. Wait, the difference between life and why you're not? No problem. Thank you, brother, for being over here. And always, I'm here as your brother. I'm not a teacher. I'm just a friend of you all guys. We are all learning together. Just I love to talk to the guys who are here, not as a viewer, as a family member. I think like that way because I spend most of my time with you guys. But this is my right. This is my, uh, of course, this is the right for me to know who are watching us. So, of course, please let me know, all of you, where are you from and what is your name. Traders from Florida, welcome to Connect Up. Yeah, I think some of them are also from Florida. Jamie, then Eiffel Trader, they're also from Florida. So I think when they will join, we'll see how many people are from Florida. No, I was from the charts yesterday. My central heart heater broke down and I spent the entire day to replace it. Okay, Suzy, that's why I missed your name. No problem, brother. I hope that's okay now. All right. Well, would love to wait 2 more minutes before starting talking about the sheet price action. Saying it sheet because people doesn't want to listen. They want the no only. That's why I'm saying sheet. Whatever, let it go. Go for the no waiting, guys. I don't think so people are going to join right now. They will join later. However, this is the calendar. Today's Tuesday. You can see we have a news around 9:45 PMI news. The best area to trade is after 10. So 9:45 p.m. can give us some kind of run. If it doesn't give it to us, then the run is gonna happen around 10 a.m. So if you see ever there is a news around 9:45, not 10, instead of 10, there is a news around 9:45. Be careful about the 10 because if the 9:45 doesn't give you the volatility, then sometimes market actually give the volatility around 10. So the best area or easiest area to trade is around 10, but we will try to frame any kind of trade after 9:45. No trade is valid before 9:45 except first presented fair value gap entry. I'm not going to talk about the first presented fair value gap entry. Instead of that, I'll go with the price action. So I don't need to keep it open anymore because we know that when we are going to jump into a trade after 9:45. This is a something like bar chart. You can see barchart.com. If you come over here and search for a symbol over here around here, for example, I'm going to search Nasdaq in a Nasdaq. What is that? Nasdaq. Okay, in Nasdaq. Okay. Mm, I actually forgot because I kept the smart Nasdaq. I forgot. You guys, please keep it. Find it out. How to find it out? Please do that. Just gonna go directly to Nasdaq from futures market to come to this Nasdaq. You see, this is the running contract we are using in QZ 2025 December contract, where the volume is 47,000, and the next contract, which is March 26, the volume is near about 108. So here the volume is smaller than the next contract. I give highest priority to the volume, as I have seen NQH has more volume rather than NQZ. I would love to move to NQH right now because it has low volatility. It has highly volume. Okay, over here, not volatility, volume. As well as this open interest is also important. Both of them should be higher than the previous contract, but here there is a bit higher open interest around here, which I'm going to expect around 9:30. It's gonna be lower than the new contract. So overall volume is higher. Going to predict this is going to be higher after 9:30. We'll move to NQH 2026, that contract. So I'm going to change my contract today. If any of you would love to change it later, you guys can do it, but I'm going to change it by today because the volume is higher and the open interest is very near to each other, and which I'm expecting is gonna be higher around 9:30. So this is the bar chart. You can come here, you can just compare this volume and the open interest to find out when you should change the contract. Now again, it's up to you, brother. I'm just uh going to use the NQH because the volume is higher, and I'm going to predict this is going to be higher. This is the live streaming, and you can see here 45 people are watching, 17 likes. I need more likes. I need more likes. Please make sure that you all have pushed the like button. The only thing I ask you guys, just give me the likes. That's all. It will help us to know the algorithm. Okay, this guy is doing something good. Let's boost this channel, something like that. So please push the like button if you don't mind. Otherwise, give me some money. I'll be okay with that. So this is, you can see NQZ, which is the previous contract. All of this thing I'm going to change it NQH. Here NQH is the new contract. I would love to use this contract instead of NQZ, so I'm going to remove the NQZ. This is the new contract, March contract NQH. I'm going to use it. If you don't feel good, you can keep the NQZ as well if you want, but I would love to change it. Going to make it bigger here. Coming to weekly chart. This is the weekly chart, and you remember this, that range I showed you, in range high, range low, was the equilibrium around here. As I told you, if you see the daily candle is here and then finally closed above this area, you will be able to see there is just a wick. From the weekly chart, there will be a wick, which I'm going to expect. So from the area, I'm not interested to see it will go below this line, is the lower quadrant line of this area. Of course, it can go over here, but I'm not expecting that. Job is done here. When I will go to the daily chart, you'll be able to see. I'm more interested to see only the bullishness to the market. This is the daily chart. If you guys remember, I showed you this fair value gap over here. Going to mark that fair value gap over here. Extend it to your right. You can see that this market actually trading so far this fair value gap. Then why did it fall until here? Now, first of all, this order block opening was important to me. Here, this order block opening that should be traded. If you go to NQZ, you will see the order block opening was bit below of that fair value gap. So here, this fair value gap a bit below because of the contract change. It's showing the different price action over here. However, why it come until here, I'm going to show you that. So yesterday, if you were with me, I showed you that this high has cleared that high. This is a new dealing range high, dealing range low. If you come here to here, you'll see this is the 50%. So how far this market can maximum fall until this 50%? I'm not expecting this is coming here or this area, which is the last fair value gap, you can say around here. I don't want to say this market will come here because this is a deep discounted area. If this market would love to go higher to clear this buy side liquidity or the resistance area, it should not go below the consonant crossment or the 50% of the premium and discount area. This is the equilibrium. It fall until here to trade something very specific from my lower time frame. I'll show that to you. But for now, it is trading the bullish fair value gap, 50% order block. All of these things has been done over here. I'm more interested to see it will start to go higher for this buy side liquidity. I'm not bearish anymore. I'm extremely bullish right now. Coming to 4-hour chart, if I come to this 4-hour chart, this that daily bullish fair value gap. So don't get confused about this bullish fair value gap. The daily bullish fair value gap over here, I'm not interested to see it will come over here. So this bullish fair value gap, not interested to see it will come over here. However, if you guys remember this lowest down close body close candles over here, you mark that opening of this candle from 4-hour chart, extend it to your right, you'll be able to see how beautifully it is reacting from the opening of that lowest down close body close candle. Not a perfect order block. I don't need to be a perfect order block over here because I'm not going to push the button around this area. This is the higher time frame. I need the confluences here that will tell me I'm bullish. It has traded that area from my lower time frame. Now I'm expecting this will keep going higher. Any kind of buy above the 50% of this bullish fair value gap is a valid buy or high probable buy to me. Target is this buy side liquidity over here. So I'm going to mark this high over here, which you are not able to see from the daily chart, because from the daily chart there is just a single candle high, not a swing high. But from 4-hour chart, this is a beautiful buy side liquidity over here. The beautiful buy side liquidity, which is my first interest here. Then this last fair value gap, finally that buy side liquidity here, which I'm not going to mark, and the all-time high. This buy side liquidity is my first interest because this all area is a strong resistance. Whenever this market came to this zone, market rejected, market rejected, market rejected, market rejected, rejected, rejected. So many times market has rejected this zone. So it's a very strong resistance zone. Retail traders are going to believe that market is going to take some kind of swing low that is very obvious to them to look for the sell. I'm not interested to see this market will fall for this swing low or the new support zone. There is some kind of support as well. To just change the contract, you will be able to see that. I don't want to see that it will go below this support zone for making all of these sellers as a profitable trader. So for me, when it came here, it's a great opportunity to reverse for the buy side liquidity. any kind of buy above the 50% of this bullish gap is a valid buy, high probable buy to me. From the hourly chart, if you take a closer look on your left, you'll be able to see there is a fair value gap, which is the last fair value gap. So I'm going to mark that hourly fair value gap with the volume imbalance and extend it to my right. Here, that hourly bullish fair value gap. Why it fall here? I will show that to you again. I mean, after a bit. So it is trading the hourly last fair value gap plus lowest down close body close candle, which has traded a fair value gap order block. Extend it to your right, you'll see it has been traded that order block as well. I'm not interested to mark the order block over there. I'm interested to show you this hourly fair value gap which has been traded, and then market has been rejected from there. Right now it is trading here. I would love to see it will keep going higher, keep going higher, keep going higher for the buy side liquidity. We'll go to the 15-minute chart. We'll see what happened over here. We'll go on my left and we'll see if I have something very specific over there or not from 15-minute chart. Now from 15-minute chart, it seems like very messy over here, but if you go to the NQZ, you will be able to see that there is a 15-minute last fair value gap that is very clean, very easy to mark, but because of the contract chance, it seems like very messy price action. If you go to the NQZ, actually let me show you that. If I come here on 15-minute chart and if I show that to you here, okay, so that hourly bullish fair value gap, what you have seen from right now, I have just marked, and at this fair value gap from 15-minute chart. See how beautiful this 15-minute last fair value gap. Here, this is the 15-minute chart. This is the hourly bullish fair value gap. This is the 15-minute last fair value gap. Extend it to my right. You'll be able to see how beautifully it tapped to this 15-minute bullish fair value gap and then started to go higher. Come until here, then it is rejecting. So this is that 15-minute last fair value gap I'm showing you, and this is the hourly last fair value gap. Coming back to here, and this is that 50-minute last fair value gap over here that I'm going to mark and extend here and here. Market last fair value gap. What I'm waiting for, of course, I'm interested to look for a buying opportunity. If I'm interested to look for a buying opportunity before 9:30 or around 9:30, I'd love to mark any kind of fair value gap that is market respecting. Still, I don't know that is it respecting this fair value gap or that fair value gap. Here, a very small fair value gap. However, if I see around 9:30 market is still respecting this gap, I'll mark it as my today's influencer fair value gap. So until this market is below this fair value gap, I'll not look for the buy, or just depending on the price how far it is reaching. If I see it's reaching, okay, here is a fair value gap over here with the volume imbalance, so I'm just going to mark that. Right now market is respecting, I'll keep it simple. This is the 15-minute bullish fair value gap which is respecting prior to 9:30 over here. Until this market is above this fair value gap, I'm good to go look for buy. If the market is below this fair value gap, I will not look for any kind of buy. I will wait this market to go above this 15-minute fair value gap to frame my buying opportunity. More mm, specifically, any kind of buy above this dashed line here, the 50% of this daily bullish fair value gap is an high probable buy. Any kind of buy below this 50% of that daily bullish fair value gap is a low probable buy. I'm not interested to look for sell. I'm only interested to look for buy. No sell is valid to me. Now, more importantly, I'd love to draw your attention around here, this high, that weak high. You can see this is a swing high, that is a swing high. I'm going to mark that here as my buy side liquidity. Buy side liquidity. Now, this high has cleared over here by a shallow run. It's my obvious liquidity. I'm going to keep like this way, but at the same time, this high has cleared that high. So it's a swing high. Same thing happened here. This low has cleared all of this sell side liquidity. That is a swing low. From here, this is a new dealing range. As we are going to frame our trade from 1 minute chart, I'm interested to mark this low and that high over here. Okay, so this is a new dealing range. In this dealing range, you will be able to see that this is the equilibrium of that dealing range. What I'm expecting this market will go higher. If I'm expecting this market will go higher, if I'm expecting this market will go higher, I'm just not interested to say this market will fall for this line. See this line with the last fair value gap over here from the 15-minute, this leg, not the old gap. This old gap I have used for the reversal, and new gap which is around here. Guys, I'm going to remove this line over here, that is the daily 50%. Just remember, this is the daily 50% market. Let me show you. This is the whole dealing range, low to high, the 50% where this market came. This fib I'm going to remove. You have already seen that market traded the 50%. You don't want to see it will come here to this fair value gap, because if it come here, it means it is interested to clear that low. So I'm not interested to see it will come here. If it come here, of course I'll let this market go, and maybe we'll do something else. I don't know what we are going to do, but I'm not expecting this market will come here from the daily chart. Going to remove this dealing range from the daily chart, because we don't need that for 1 minute chart. We need 15-minute dealing range. Coming in 15-minute chart, all of this price action here. First look at this price action, dealing range over here. Look, all of this price action here. See, this price action is inside that leg over here. This is the leg. This high has cleared that swing high. When the swing high has been cleared here, this is the high, the low, the dealing range, one as well, and this one as well. From here to here, going to mark it. From here, new dealing range, the equilibrium. If I am bullish, I'm interested this market will keep going higher. What should I look for? This market will come here, this deep premium area. It will come here. So if it can tap here, it's a confirmation market is going to take that high over here, which is a relatively equal highs with that high, relatively equal highs. As well as I have some buy side liquidity here, around here, which is the buy side liquidity and the extreme buy side liquidity over here. First, this market fall, cleared all the sell side liquidity, traded a very specific area. Now it came until the equilibrium. If it would love to keep going higher, it has to come over there. This is that dealing range high that is going to be cleared if the market come over here. I have already an idea about this dealing range. I'm going to remove that dealing range. Now I'm expecting this market will go higher for this high. There is a new dealing range market started to reach, started to go higher. Until it's not coming here, I'm not confident that this is going to clear that high. So before coming here, I have some buy side liquidity here, so I'll just keep this swing high and that high as my buy side liquidity. I have a new buy side liquidity below this premium area. Remember, I'm expecting it will come here. So new dealing range that has cleared that lows, as well as that high has cleared that swing high. Here is a new dealing range. Going to mark the low and the high, expecting this market will go higher. So if this market come here around this area over here, it means it's not interested to go higher for that old dealing range premium area. I don't want to see that. I would love to see it will keep going higher. So if it would love to keep going higher, it should not go to this deep discounted area. Will maximum can work until the equilibrium, then it should start to go higher for the buy side liquidity, and then finally to the premium area. Last fair value gap will give some kind of reaction, finally it will clear that high and it will go for those buy side liquidity. This whole concept is gonna be broken if it come here around this deep discounted area. It can only come to this deep discounted area if it wants to do the consolidation, or it wants to take that low over here. This is the only true reason for this market to come for this deep discounted area. Means if it come here, deep discounted area, which is aligned with this last parameter from the 15 chart, has two possibility. Either it will do this whole day, it will do this, or it will just fall and clear that low one more time before going higher and keep going for all of this buy side liquidity or everything. This is the two type of scenario. Both of this scenario is a low probability, and we should not enter into both of this probability or situation. For us, the best case of scenario, it will work with the discounted area. It will start to go higher for this buy side liquidity. I'm going to remove this fib. Just remember, this dealing range market should not come to this discounted area. Going to remove it from my chart. Coming to 1 minute chart now. So I'm in 1 minute chart right now. Here, that buy side liquidity, I'm expecting this market is going to clear, not the extreme buy side liquidity over here. I don't have any intention to look for this buy side liquidity today. No intention, nothing. From the 15-minute chart, I have this smaller buy side liquidity over here. If I come on my left, you will be able to see there is a clean highs from the 1 minute chart, and from 15-minute chart, I have some obvious liquidity here, obvious liquidity plus this liquidity. So I'm going to mark it like this way over here. Okay. So from 1 minute chart, you are able to see there is a beautiful buy side liquidity which is aligned with the 50-minute swing high. See, this buy side liquidity is so obvious to me. Okay, and there are some more buy side liquidity here. I'll mark them later. Right now, I'm just going to keep this on my chart. Market fall after building the buy side liquidity. Market fall came here, bit consolidation, finally cleared that low over here. Wait, consolidation, consolidation, consolidation. Last time market fall, trade the 50-minute last variable gap, started to go higher. Retracement, cleared the liquidity, go higher. Retracement, build the liquidity, go higher. Started to fall by using the news, market went higher. Cleared the buy side liquidity, some sort of buy side liquidity here. This highs over here that has been cleared over here. Rejected from there, fall, cleared this sell side liquidity over here that market accumulated before. After clearing this, traded this last variable gap from the 1 minute chart. Look, below here, I don't have any other sell side liquidity, no sell side liquidity, but that was the sell side liquidity market has been cleared over here. Traded the 1 minute last variable gap, gave me the market structure shift over here. See, this is a high probable buying opportunity over here around this gap. Cleared the liquidity, market structure shift, fair value gap, breakaway gap, high probable buy around here. Now we are not going to take this buy because it's before the 9:30. Around 9:30 we can did the damage. That means this market can fall one more time, then start to go higher. Around 9:30, if it fall, we are going to cut through that candle, and for the next time it will close above this gap. It's still that valid 22 YT model. Or around 9:30, if this market starts to go higher, I have to wait for some kind of liquidity to be taken before giving me another buying opportunity. Until where? Until this buy side liquidity. Right now, I'm watching any kind of buying opportunity above this fair value gap from 15-minute chart to look for first this buy side liquidity, then this buy side liquidity, then all of other areas. It will start to fall. I will keep watching, can it come here or not. If it come here, that's an opportunity not to trade anymore. Why? Because this is a deep discounted area, means market either interested to go for the consolidation or it is going to clear this low one more time before going higher. In that type of scenario, I will let the sell go. Sell is not the job for today. For today, the job is to go for the buy side liquid. It's not the job fall and clear that low. It's not the job for the market. Yesterday, if you remember, market fall, cleared that sell side liquidity. That was the job for yesterday. But today, for market, the job is to clear the buy side liquidity because I have the buy side liquidity. I don't have the sell side liquidity. If the market fall, I will see that, okay, that's a great opportunity to look for a buying opportunity. If it doesn't fall because it has already cleared the liquidity, maximum portion of the liquidity has been cleared over here, traded this fair value gap over here and gave you a 22 YT model, best model, entry fair value gap, breakaway gap. Now, if you ask me what do you want to see right now, I would love to see this market is coming here, not going to take that low, which has cleared that sell side liquidity over here. I don't want to see market is going to clear that low. Instead of that, it will come here, clear this swing lows, and then start to go higher. I will start to look for a breaker block entry over here, around there, some kind of breaker block. I would love to see that breaker block will give me the entry opportunity, at least for the last fair value gap to take the partial, this high, and finally that buy side liquidity. This is the best case of scenario for me to frame the buying opportunity or to frame the buy. If it happens, this is a high probable buy to me. 9:30 Judas swing will clear this sell side liquidity that market has engineered time distortion for 9:30 manipulation will be cleared, and then this market will start to go higher. If it doesn't give me the entry opportunity from the breaker block, I will immediately look for this fair value gap as an inverse gap. So I'll mark this gap over here. I will extend it to my right. When it will fall closed above this gap, if it doesn't provide me the breaker block, I'll try to frame my buy from this fair value gap, which is gonna be my inverse fair value gap, to take the buy. Look what I'm saying here. I'm not talking about taking sell. I have no plan to take the sell. I'm only interested to look for buy for every kind of possible opportunity. Whatever opportunity this market is going to provide me, I'm gonna catch it for taking the buy only. If this market is falling and some of PhD holders is going to join and they will say that I told you this is going to be fall, this market is going to fall, or blah 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 bullshit, all of these things. Keep that in yourself. What I'm saying, this is going to happen. Not 100% of the time, but 90% of the time, whatever I'm saying, this is going to happen. Now or later. Even if this market fall, come here, around here. Remember, it will clear that low and then it will start to go higher again. I will let all this fall go. All of this fall, I will let them go. Then I will catch that buy down. Because when it is falling, I have no idea how far it will fall. I have no idea for that. That's why I told you the high probable opportunity is market is not going to take that low. That is the origin low of that setup. Market is not going to take that low. Instead of that, it's going to clear this liquidity, relatively equal lows, tap to this gap, and then give me the opportunity to take the buy. It's my understanding of the market, and I will work with that. If it happens, I will enter into the market. If it doesn't happen, I'll not take any trade. So 4 minutes to go, 3 minutes to go before going any kind of trade. For example, it has already done the job. Okay, so just for the sake of this conversation, before 9:30 or around 9:30, it started to go higher. Around 9:30, okay, just exactly the 9:30 candle. I'm not going to touch that market because 9:30 is a volatile candle. It can simply come here, then come there, then go higher or lower. All I mean that 9:30 candle, you have to cut through that candle. That candle never be printed on the chart. Think like that way. That candle never been printed on the chart. By the way, 9:45 we have the PMI, so until 9:45 please don't try to take any trade. Even if it frame the trade, we'll just outline that but not going to take that trade. We'll write down boom, we'll do everything but not going to take that trade because we have 10 9:45 AM news and we're not going to take any trade before that news. We'll see. Just 3 minutes, 2 minutes left before the 9:30. you have any question, if you have any question, please let me know. And please push the like button before starting the stream around 9:30. So I can see 117 people are watching. 51 likes. Can you please push the like button? Please do that for me. Thank you. Good morning, Baragan. Hey, Ellie. Good morning, brother. I'm cool, brother. Good. I'm cool, sister. How are you? Hey, Sophia. Thanks for that penguin. And Mahati, thank you so much, brother, for sharing the Discord link. If any of you are interested to join us to our Discord, it's for free, of course. Please join through that link. So this low has cleared over here, so I can't use this gap to take my buy because the origin low has been cleared over here. I should not use this gap anymore to take the buy. I'll wait for the next opportunities, find out any buying opportunity or buying case of scenario. Just remember, any kind of buy above this fair value gap is a valid buy. No buy is valid while this market is below this 50-minute bullish fair value gap. I just used the volume imbalance so that I can simply observe this gap. That's why I have used the volume imbalance. This gap, I don't have any value. I'm not going to keep it here. Also not valid. I'll just keep them out of my chart. 10 seconds to go before the market open. Was going to react around 9:30. There is a opening gap. Market gapped lower, gapped down. If it started to fall, everyone will start to chase the market. So of course, it's not going to fall over there. However, market has cleared for the last time. The liquidity has been cleared. This is a swing high, which is valid for shifting market structure over here. This swing high. I'm going to mark the high and the low over here. This is the new dealing range, high and the low, and I'm going to keep it a bit here. This thin line is the opening gap line, okay, and this is the opening gap. See this gap over here, it's one of the best inverse fair value gap. Got the market structure shift, fair value gap, best 22 IT model. We are not going to take that. Instead of that, we will just observe it. So for example, if there was no news around 9:30, that will be my limit order here to here. That would be my limit order for this buy side liquidity after clearing the partial, okay, from this gap. We are not going to take it. I repeat, we are not going to take it. We are just going to outline it to see how it is going to work, because we have the news around 9:45. The breakaway gap, if it makes another fair value gap over here, 22 YT model, entry fair value gap, breakaway gap. At the same time, two fair value gap. One is here, another one if it create a gap over here. If I miss the trade over here, for example, I have missed the trade over here, I would love to try to take the entry from here somewhere. Until now, there is no fair value gap. If it build another fair value gap, however, if it build the fair value gap here, it's not valid because it's around the upper quadrant deep premium. I'm not interested to catch the run from the deep premium area. So far, this is the only opportunity for me to take the buy from this inverse gap and from this what's the only gap after getting the market structure shift, liquidity taken, market structure shift. We're not going to take it, we're just observing it. But trust me, it's going to work. We're not going to take it because we have the news around 9:45. We'll just observe it. It didn't give the entry. Either way, we'll see. Just write down boom, okay? But not going to take that trade. Just remember that no trade is valid before 9:45 because it can keep falling. I don't want to get stopped out over here before 9:30. That could be the entry. For example, we don't have the news. What would we do? 39 handle is gonna be our partial. Okay? So this could be our partial over here. After taking the entry over here, we would try to take the partial around 1:1, which is here 39 handle. After taking the partial, we would hold the trade for this buy side liquidity. As we have the news, we are not going to take this trade. Remember, I'm just trying to show you the beauty of this price action, the precision of this price action. It's not something random. It's not something like, I didn't want to show that, but some of you started to say that ICT concepts is just for taking entries or something, blah 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 blah. No, if you would love to read this market, ICT concept is the best to read the market, how this market is going to book the price from one level to another level. Everything for entry, for reading it, how far it can fall, how it is going to go higher, which PDRA is important to you. It's not something like 50-50, it's not something like random, it's not something like it's going to work thousands one time out of thousands. No, something not like that. It's very specific, very easy, not complicated. The problem is you are not practicing this. You are not watching how you should do that. You are not doing that right way. What you are doing, you are just watching the ICT concepts and thinking, wow, this is the market structure shape, so I'll take the buy here. You don't know the context. You don't know how to use the higher time frame PTRA. You don't know how I can look for the liquidity run. You don't know that. That's why it's kind of random to you. It's kind of million of the fair value gaps over here, a lot of these things, but it's very specific, very easy. Just we need to practice this. Now you will say sometimes it's 50-50. There is no concepts in this world for trading that is 100%. There is no concepts. The best is Simon Brothers, who has 80% accuracy. 80% accuracy. That is the highest accuracy. So you can say this is 50-50 because my knowledge is limited. But if you say you have 100% accurate concepts, no man, you wouldn't be here then. We would never see you then. Because do you know why? You have 100% accuracy. You would be the billionaire, trillionaire. Because it is 100%. There is nothing called 100%. They trade it here. What else it is trading? The lower quadrant of the opening gap. So this smaller or thinner line. See this thin line over here? This is the lower quadrant. It has traded that lower quadrant, gave you the partial target is here. Not random, not something like, okay, this time it is going to work, next time it's not going to work. No, it's not something like that. It's very specific. I am not able to show you sometimes because I don't have multiple monitors. See how it is reacting from this gap? This is one of the best inversion fair value gap over here with the premium and discount things. Again, I am not able to do that. Keep doing that because I have just one screen. I don't have the setup right now. I'm trying to build my setup when I will have just three monitor. So I need just three monitor. I will show you how precisely it is going to work step by step, one after another. However, this is the first presented fair value gap. So this is the only entry that is valid before 9:45 from this first presented fair value gap. See this first presented fair value gap. It has finally closed the opening gap 100%. This thinner line is the opening gap. Came to the deep premium area. If I'm bullish, I would love to say it will come to this deep premium area before going higher. If it failed to come to this deep premium gap, it has a possibility to fall to clear that low before going higher. As it come here, I'm now pretty much confident this market is going higher. Now, look at this down close body close candles. Okay, down close body close candles. They're one of the best order block. Traded this order block over here, around here, should keep going higher. Again, please don't take this trade. Now, how much it has provided you so far? 87 handle. Now, for example, we don't have 9:45 news. We are allowed to go for this trade. What did I say? This is the best new 22 IT model. Previously, that was the 22 IT model. We are not allowed to take this trade before 9:30. Around 9:30, market fall, took all the liquidity one more time, gave you the market structure shift, immediate reaction, one of the best 22 IT model over here. I missed this trade from this gap. I don't care. I'm going to re-enter from this order block over here. See this consecutive candle? By putting the stop loss below this order block from here. Going to do the same thing. Take the partial around 1:1, close the trade here, just here, the premium level. Because you know, if this market would love to go higher, it should at least come over here. More importantly, to this last fair value gap over here, around here, below this liquidity, around here, last fair value gap. It is reacting from that last fair value gap. More importantly, the highest up close body close candle that has been reacting from there. Just the reaction. Why? We have news around 10. This market is waiting for that news. After the news, it's gonna run toward the liquidity I'm expecting. After 5 minutes, it's gonna be the news, so we'll wait for the news. I'm gonna keep the things out of my chart. You keep it for your understanding. Perfectly closed the opening gap. There is no opening gap over here. Whole opening gap has been filled. You have the opening gap. No, I'm going to remove this opening gap, even though it's important because I don't want to see this market will go below the opening gap constant crossment. I don't want to see that because when it come here, upper quadrant came back again to the lower quadrant, worked it as a support. Even if it would love to fall, it can fall for this 50% of the opening gap before going higher. Reaction from the top of the opening gap sent the market until the 50%. 50% will hold the market plus the order block, and this it will keep going higher for this buy side liquidity. So I would love to see that, but as we have the news around 9:45, the news candle is very dangerous because it can simply fall boom boom. It can do that type of scenario. That's why I'll be very careful about the news candle. And if I see there is no reaction at all, it's gonna be difficult for me to trade around 9:45. Just 4 minutes left before the news release. See how it is going to release the news. Then we'll try to go for the trade. Hey, Phil Trader, how are you, brother? Wait for the news. After news, we are going to enter into the market. We'll try to enter into the market. Relatively equal lows here. Market has cleared new leg from here, which has cleared the all buy side liquidity. See this, all of this buy side liquidity, high, low, a new quadrant level. Go to your 15-second chart. From 15-second chart, watch, like, just do these things. If you have the ability to go for the 15-second chart, until this is not going to taken, this low is not going to taken. Go to your 15-second chart, mark the high and the low. If you find any kind of fair value gap, inverse fair value gap aligned with this line from 15-second chart, that's an high probable buying opportunity with the lower quadrant. Go to your 15-second chart, and while this market will close above this line, above that line, there is a bearish gap. You find that bearish gap after building the low. Okay, so remember, the until it's not going to build the low, you have to just moving the low, and then when it will start to go higher, you'll just look at this lower quadrant level to see if it can close above this lower quadrant of that range, whatever range it is going to build over here. And there is a bearish gap aligned with this range. Here, see this bearish gap, it was aligned with the range from here to here. I'm just going to show that to you. Here to here. Here, see this quadrant level over here, the lower quadrant, this gap was aligned with this lower quadrant. That's why I told it's one of the strongest inversion fair value gap. Tap here, market rejected, come here from this gap or the lower quadrant. So do the same thing from your 15-second chart, because this is the 1 minute chart. So we'll go for that low, that high range, or the daily dealing range, lower quadrant level. Go to your 15-second chart. If you see any bearish gap after the 15-second candle close above this line, there is a inverse gap. That's a high probable inverse gap for the nearest buy side liquidity. You will be able to see from the 15-second chart, but don't push the button before 9:45. We have a news around 9:45. We are waiting for the news to release, and then we'll go for the trade. Very random, right? This leg came very random level. Let me show you the random level with the volume imbalance. Here, extend it to your right, a very random level. Remember, until this low is not taken, if this low is not taken, any kind of breaker block bullish breaker block is a valid bullish entry. Any kind of bullish breaker block. That means if I see any kind of scenario like this, low, lower low, highest up close body close candle, tap to this body close candle, boom. This is an high probable breaker block. So far you can see high, low, higher high, lower bearish breaker block. I'm not interested to see this breaker block. I'm interested to see low, high, lower low. This highest up close body close candle, my high probable breaker block. So far, maybe this market will do this until this low is not taken. Remember that. Maybe this market is going to make this. In this kind of scenario, low, lower low, here whatever gap is going to be highest up close body close candle is gonna be, it's gonna be my high probable breaker block to take the buy. Take the buy until this low is not taken. This is the news candle. Let's see if there is any volatility or not. If no volatility, I'm cool. All I don't want to see, this low should be taken. Is going to take, because if this low is taken, I have to wait for the new PDRS. I can't use any of the old PDRA if this low is taken. So for me, the best case of scenario, it should not close below the upper quadrant of this week. Here, okay, it has already closed, so it doesn't have any value anymore. I can't use any of this PDRA anymore. We'll wait for a new PDRA. It has taken that low one more time. We'll wait a new PDRA. The high, this is the low. I'm going to mark that range here to here because this is a new dealing range. How it is going to work. Right now, go to your 15-second chart one more time. First time, it will close above this line from 15-second chart. Look for the inverse gap to take the buy. If you have any. $25,138. Target 25,138. Don't worry. 25,138. Okay, you took the sell. Best of luck, brother. I hope you'll get your boom. Keep watching, okay? So market fall, cleared that liquidity. What is your target here? Why? Because market came the deep premium area. So this market is going higher to take the buy side liquidity. No sell is valid until this market is above this 15-minute bullish fair value gap. See here, prior to 9:30. Guys, I'm trying my level best to show you the levels. How you are going to read the market. Please focus. Until it is above this gap, you are looking for the buying opportunity. Market has cleared the liquidity one more time. If it close here somewhere, I don't have any market structure shift. So what I have to do, I have to wait for two fair value gap to take the buy. One fair value gap is highly risky. I'm not interested to catch the one fair value gap to take my entry. I can use this gap. See this gap? The valid reclaimed gap to take the buy. Here, this one is as a reclaimed gap. It's valid to take the buy. If you are my member, you know how to use this gap. You already know that, okay? So please keep that in your mind. This is not inverse gap, it's a reclaimed gap. I'm able to use this reclaimed gap, take my buy. After the news, until news, no trade is valid. After this news candle, if I'm not able to take the buy with the two fair value gap, what I will do, I will wait for an order block to take my buy. So there will be a down close body close candle. I will take the buy from the order block for this buy side liquid. Okay? You will keep thinking about the buy only, no sell, nothing. The way I explained you the price, try to remember them, how we are going to predict where the market is going for from very high time frame. It's not something like we are seeing some down close candle, so we are going to think, oh, it's a bearish market. No, please don't do that. Even if it come here, we don't care about that because we know we are going to go higher again. We'll let the all fall go. I'm afraid to use this last fair value cap as the inversed way because this buy side liquidity doesn't look good to me, to be honest. But we'll try, we'll take a risk. When it will be inversed, we'll try to take a buy will put my stop loss below the candles, that is going to build it as an inverse gap over here. And for this buy side liquidity, bit risky because this high actually didn't make any relatively equal highs. Here you can see this high didn't make any relatively equal highs, but actually we have the buy side liquidity here, which is gonna be taken. Bit risky, but we'll see, can provide. Or we will see if it can come here, build an order block to give us the buying opportunity. That buy is the highest probable buy. It will fall here and then give us the order block to take the buy. That is the best case of scenario. If you have the ability to go for the 15-second chart, when the 15-second candle has closed here, look for the inverse. Sorry, not here. Sorry, here. When the 15-second candle has closed here, do you see any inverse parallel gap over here? That means bearish gap. Is there anyone who can go for the 15-second chart? Please let me know. Is there any inverse gap over here? And did market give you the entry opportunity over there or not? Any of you has the ability to go to the 15-second chart? Tell me when this 15-second candle, not 1 minute candle, 15-second candle. However, if it close above this, I'll try to take this buy. Bit risky, but would love to take this risk over here. Stop loss is going to be below that candle over here because this is the candle that has validated this inverse gap. Let's see if it can give us the entry opportunity. Yes, there was a inverse fair value gap on 15-second chart. There is no entry fair. No, I'm not asking about the entry fair value gap. I'm asking, this is the range high, this is the range low, this is the lower quadrant. When the 15-minute candle first time closed above this line, look on your left, was there any down close, body close, sorry, CB, sell side imbalance, buy side inefficiency? Is there any sell side imbalance, buy side inefficiency? If there is any, when the candle has closed above this gap, then did it tap to this gap, give you the entry before that buy? This is the best area to take the buy from the 15-second chart. Trust me, and just check it. If it give it to you, let me know. Unfortunately, it didn't tap here yet, so we'll see if it can tap here or not. Okay. Still didn't give me the entry opportunity. Stop loss below that candle that has validated this inverse gap, last gap inverse. A bit risky, but is still valid because I have this clean buy side liquid. I'm predicting this is gonna be taken. So I just need the entry from this gap. Stop loss is below this candle. We'll go for the partial 1:1. So that's gonna be here. It give us the entry. Okay. Let's see. Nobody should close below the concurrent crossment of this gap. Remember where the market came? High to low, deep premium area. Okay, that should be the entry. And here this is going to be the partial. This is going to be partial 1:1. Don't want to see anybody close below the concurrent crossment. If the body close, I will start to move my stop loss after closing another candle above this candle. Okay, this is the buy side liquidity, that is my target. It can fall, there is nothing wrong if it wants to fall, but body should close above the concurrent crossment. I'm going to remove this quadrant levels or the premium and discount. Body has closed, it's not a good sign. So here there is two things can happen. At first, I can get stopped out. Second, without stopping me out, it will close above this candle. If it do that, I'll move my stop loss just below that candle because it has closed below this 50%. So it should not close. It has closed. It would love to trade this gap. I don't want to see that because it has closed above the last fair value gap. So all I would love to see, it will keep going higher. But this is the time for me to move the stop loss. if it doesn't stop me out, because my stop loss is below this candle that has validated this inverse gap, it can trade the rejection here. See this rejection area? It is permissible for this market to trade this rejection area. However, right now when the first time it will close above this high, I will move my stop loss below this candle because this candle has violated the things I didn't want to see. The first time it will close above this candle, it's my time to move the stop loss without stopping me out. And unfortunately, it will stop me out. That's bad luck. Or maybe I'll get stopped out. I'll try to take re-entry. It will close above this candle, one tick above this candle. I'll move my stop loss below this candle, below this candle, because it's a low probability to me right now. But brother, you told that it's going higher. I know that, but I can't take that risk. Maybe it wants to come here. I don't want to take that risk. First time, it will close above this order block. I'll move my stop loss below this order block. I'll get stopped out. I don't care. You don't need to follow my stop loss. If any of you are in this trade, no need to follow my stop loss. I will do the things I love to do. Stop loss is gonna be here. If it close, remember, if it doesn't close, I'm not going to move my stop loss. I'll get stopped out over there. If it stopped me out over there, I don't care about that. Right now, it is trading a bearish fair value gap. Keep an eye over there. Now, stop loss should be safe here because this is one of the best or strongest order block. The market should react from this order block and keep going higher for this buy side liquidity. We'll try to take a partial around 1:1 and then we'll hold the trade for the buy side liquidity. Okay, this should be one of the strongest order block because this last fair value gap has built that inverse, order block. There is no need to put the stop loss over here anymore. So what I have done, I have moved my stop loss to 14 handle from 31 handle. You don't need to follow my stop loss, trailing stop loss again. I would love to work with the price a bit below, actually bit below, give a bit more space. I need speed that is going to close above that high, I need speed now. Body should close above that high. That is gonna be a confirmation of the bullishness. Why? Because this is a new weak opening gap. I wanna see body close above the constant encroachment of that new weak opening gap. Where the partial has been taken, it will take a bit time for loading. So 31 handle partial. Remember, I'm talking about the partial. For some people, 31 handle is more than enough for being profitable. Target should be here, around here, or above this area. I'm just putting it randomly over there so that I can explain more price action. Okay, just for that. Here, I would love to see an unfilled gap to put my stop loss to the break even. If there is a bullish fair value gap that's going to be unfilled by third or fourth candle, I'll be able to move my stop loss to the break even. Right now, I can't put my stop loss to the break even. Why? Because this market can fall again, trade the order block, not only the order block, but also the 50% of the order block before going higher. So I need the confirmation. What is the confirmation? A bullish fair value gap that should be unfilled. So I was trying to frame the trade here. I missed it, no problem. I have the last opportunity here because I have the last fair value gap over here. I'm going to believe that nobody is going to close below the constant encroachment. If the body close, I will move my stop loss because I don't believe in this shit anymore. It can keep falling again for trading this gap. So I don't want to take any risk. Took the partial. Buy side liquidity is going to be taken. Trust me, it's gonna be taken. And then I'm just putting it here again. I'm putting it here just to show you more price action over here. How this market is going to book one level to another level. And it's not just for the entry model. This ICT concepts is for reading the market. How this market is going to go from one level to another level. See this order block over here, one of the strongest order block. Tap to this order block here. Now it is going higher. First of all, I would love to see a body close above this line, which is gonna close above the constant encroachment of that new weak opening gap. So I'm not only watching this line, but also watching here what is happening because this has the power to stop the market, send it lower. I don't want to see is going to give me the reaction. I would love to see it will go through this gap and take that buy side liquidity. This is the most obvious buy side liquidity that should be taken. By the way, let me actually keep it over here. Make it simple. Because otherwise people will not say boom. I love the boom word. Not small to handle. Until now, I didn't see any bullish fair value gap. So I'm not able to move my stop loss to the break even. Because still now there is no bullish fair value gap. I need the bullish fair value gap to move my stop loss to the break even. That's the boom. 62 handle boom. Okay, it will take a bit long time to load, but that's the boom. Thank you. I hope I read the market. I showed you the levels with so much precision, so much beautiness, with everything. I showed you the boom over here. Even if I missed this trade, I don't care. I'm going to take the trade here. It was a bit low volatility, I mean low probability, but still that is an opportunity. However, for me, the best opportunity was from there. Or I couldn't go for this trade just because of the news. So as there was news, I was not able to catch that run. But I know that how it was going to book this market over here. So this discounted area sent the market lower again from the last fair value gap as a reaction for the news, took that low, did the run toward that liquidity that's gonna be taken. It's not done. The run is not done. It's gonna keep going higher. Look at this 15-minute candle. Where did it close? Where the 15-minute candle has closed above the constant crossman. It's a confirmation market is going to go at least until the top of this gap over here. Okay, at least until to the top of this gap. If it can close up this gap until here, let's go, fly. It should be the boom, by the way, but I don't know why it's not closing it. You can see here, there. Okay, I'll get the boom later. Worries. I don't know why it's not loading. I'll keep it to the break even because it should be already the boom. You are in this trade, you should already got the boom. Okay, so this fall I really don't care about that because it already has cleared that buy side. Now tell me who were in this trade with me. Is there anyone who were in this trade with me? It should be done. Okay, don't get confused, it should be done. Thank you YouTube motivation, thanks for the boom. Kurshit, thank you. Reflect, thank you. Thank you Sophia for the boom. Hey take, thank you man. Hey took it. Sophia, congratulations, we both got the boom. Thanks for the penguin, brother. Where are you right now? Can you please tell me your exact location, man? I need to know that. Hey guys, please don't forget to push the like button and subscribe to our channel if you are new. I really appreciate it. Please guys, don't think that I am going to get stopped out to the break even. It should be here, but because of the, like sometimes this shit happen. So this is how I'm showing it. I'm got stopped out, but that should be the boom over here. If you were in this trade, you should have already got the boom over there. Now it's time to look for a new opportunity, new buying opportunity. Because now market has built one of the strongest or obvious liquidity over here that's going to be taken. All I need to see, can it take some kind of sell side liquidity, some kind of sell side liquidity. A new dealing range high, a new dealing range low is going to be created if this low is going to be taken. If this low is taken, a new dealing range is going to be created on this market. I'll show you how to use that new dealing range. I'm going to remove this from my chart because people will see I'm over trading. I'm just trying to teach you how to read this market so precisely because I'm fed up with this bullshit. Last day, I mean yesterday, I was quiet after seeing the comment on the comment box when I saw that some PhD holder is trying to dominate ICT concepts. I just keep quiet. Sometimes I really can't take this type of shit. So this new week opening gap is still holding the market. Okay, so you can see it here. Here market has taken that liquidity, that swing low has been cleared. Now I'm not convinced by that low because this low, though it has traded the top of the old new day, the daily fair value gap, I'm not convinced it because below here are big imbalances. Market has cleared that buy side liquidity. There is an imbalances, that is an unfinished business. I want to see it will fall over here. So what I will do, I'll mark the new dealing range over here. What is my expectation right now? It will come here to the 50% before going over there. What I will do, I'll mark the high and the low. I'm going to predict if this market is going to fall for this deal 50%. It is not going to go to this deep premium area. Instead of that, it's going to come here, around here, the equilibrium, and then it will start to fall. If it would love to do that, I will go to my 15-second chart again. I'll look for a reclaimed bearish fair value gap over here. Reclaimed, remember, reclaimed bearish fair value gap around this line. Two things I'll watch here. First, is it going to go above the 50% coming here? Second, if I see it is reacting from here, I will immediately switch to 15-second chart because this is the retracement I'm going to catch. I'm not bearish, I am bullish. It doesn't need to come over here, around here. It can start to go higher. Nothing is wrong over there. But if it provide me any bearish opportunity right now from 15-second chart, because the range is very small, from here to here, it's just 47 handle from 1 minute chart. I would love to catch the sell from here, from the bearish reclaimed gap without tapping here. If it tap here means I will have nothing to do right now. I'll just keep watching this market, not going to touch it. Instead of that, if it come here again, I'll look for a 15-second bearish reclaimed gap, take the sell for the 50% of this gap. So you will do one thing, you will go to your 15-second chart. When you will see, not to take the trade because I'm not able to see what is happening over there, you will just observe it. Okay, if you see a 15-second candle closed below this line over here to that new range, dealing range, if you see it has closed below this line, there is a bearish gap, that is a reclaimed bearish gap. That's gonna be the sell. You will put your stop loss above the candle that is going to validate this reclaimed gap as a reclaimed gap. That means the candle is going to close below this. You'll put your stop loss above that area. You'll target the 50% of this gap if it failed to touch this line over here. If it touch this line, this sell is not valid anymore. So remember that. If it touch it means keep looking for a buying opportunity, but I'm not interested to chase the market right now. Even though it has cleared that sell side liquidity, I'm not interested. Okay, so it came here, this buy side liquidity is gonna be confirmed, it's going to be taken over here. No buy is valid from here because it's an deep premium area. You should not go for the trade while this is in the deep premium area. Should not go for the trade. So I was thinking about that, market didn't provide me. I'm cool with that. I don't need to worry about that because it didn't provide me. Came here, confirm this is going to be taken, but we are not allowed to take entry over here because it's in deep premium right now. If it could come here, that could be the best opportunity for us to take a new buy for this buy side liquidity. Couldn't be the chasing market, but now it's a chasing market to take the entry from here. Came to this premium, this is gonna be taken. Keep watching. We are not allowed to take re-entry over here. Remember that it's in deep premium. You are not allowed to take this entry from this deep premium area. But brother, why did you take it here? Because it was coming from the deep discounted area. I have missed the entry opportunity over there. I had the buy side liquidity over here, which has been cleared over here. Remember, this is the obvious liquidity, not the clean liquidity or relatively equal highs. That relatively equal highs has taken over here by a shallow run. I know this is going to be taken, but when? I don't know that. Previously, it was confirmed that market is going to clear that on. When I missed all of this trade, I'm allowed to use this old fair value gap. Above this fair value gap, I have this liquidity to take the entry from here. Simple. Hey Tiru, thanks man. First time I was able to maintain my funded account for more than 25 days and reached payout without a stress of big lot sizes and loss. All thanks to you for teaching us. Okay, okay, thank you so much. Right, bro. I really appreciate it, man. I really appreciate it. 5490. What is that, brother? What is that line? Arti 5490. I don't know what is that. Okay, guys, so keep watching. If it can clear this liquidity, we are not going to take the sell as well. We are waiting to see if it can clear that liquidity, fall to the 50% to give us a buying opportunity for a new buy side liquidity. Okay, keep that in your mind. Here, you are not going to take any trade. It's not the area to take the trade. It's in deep premium. Let the market come to the discounted area again. It's in deep premium area. I break down all of this market until this high, this low. I break down all of this market right now. It's in deep premium area. Do not chase the market. Here it's chasing the market. Why? The high has been cleared. So let the market come to the discounted area before framing any buying opportunity. Now it came to this fair value gap. Uh, I appreciate it, but I am really confused. What should I do right now? Because I prefer this market to come to this constant crossment. But it tapped to the high of this gap. It is still valid because here is the daily bullish fair value gap high as well. It's an highest area or beautiful area. I prefer this market to come here, constant crossment. That is the best case of scenario for me. Let's see if it can fall here. If it doesn't, then we'll try to frame another buying opportunity. From here, we have to do that because if it doesn't want to come here, what can we do? We have nothing to take whatever this market is going to take. What is now? Market is in the discounted area. So I'm allowed to take the buy. For what? This buy side liquidity. Previously, it was not valid because it was in premium. Didn't trade the discounted fair value gap. I was not able to catch that run. I let this run go. Market didn't take this buy side liquidity. That is kind of blazing for us because market wants us to take with her for that buy side liquidity. We'll wait for that, but I prefer this market to come to this discounted area, at least the equilibrium of this whole range. Here to here, this is the whole range, this is the equilibrium. Wow, it has traded the equilibrium. Perfect. Then we can go for the trade. Let's find out if I can find any opportunity. Hmm, let's see. Still now there is nothing. What we are looking for, buy. Letting the market fall to frame the buying opportunity. Not selling, nothing. We will wait for the buying opportunity. Okay. Please focus on learning instead of judging me or proving me wrong. Please don't do that because I'm not like other people who will frame a trade and rest of the stream they will keep talking about that trade. I'm going with the price action. Every step, the way this market is reacting, I'm trying to break it down. So please give some value, some respect just because of that. The request to all of you. Stop proving me wrong. Stop thinking about judging me. Instead of that, focus how I'm breaking this down, why I'm saying it's in premium. Now I can't look for the trade here, why I could go for the trade from there, why I can look for the buy right now. Just try to focus them. Okay, there is an SMT. What type of SMT you are talking about, brother? Fair value gap SMT? Yeah, we have, uh, of course, man, we have the SMT. So we'll see if we can find an opportunity. As I told, best is if it fall here to the constant crossment. That is the best. If it doesn't come here, I have to find out something here to take the entry. So if I find something here, take the entry, I'll take that entry. Oh, by the way, today is the last day. Thank you, Tamimi, for reminding me. Today is the last day for the Apex sale, 90% discount. Any of you are interested for $19.60 offer, please use the code T2. You can see to the bottom of the screen here. The discount code is T2T for Apex, 90% discount. All the account size is gonna cost $19. I'm A bit consolidation, not interested to touch it. See if it can provide any kind of opportunity to us. Take the buy. It's time to wait. Thank you, Tamimi, for reminding us. Hey guys, please don't forget to push the like button. We have already got our boom. 138 people are watching, not even 100 likes. What are you doing, guys? Please push the like button. Why you don't wanna give me the likes? What is wrong with that? For free, man. Come on. No, you can say that, brother. You're not worthy to get the like. Then I'll agree with you. I'll not ask you for likes. Let's see if it can fall. This is the best scenario, okay? It can fall here for the lower quadrant of that cap. That is the best case of scenario to frame a buy. Now it's in premium area to me. Is the key to success in the markets. The most profitable traders are those who can wait patiently for the right opportunities rather than rushing into trades. Trading requires discipline. Thank you, sir. It's true. 11,493 subscriber. I just need 7 more subscriber to make it 11,500 subscriber. So if I can get 7 more subscriber, it's gonna be 500. A big congratulations for us. Whoever is not our subscriber, if you like, please subscribe to our channel. It came to the concurrent endorsement. We'll see if it can provide a buying opportunity right now. Can it come to this discounted area? 100% it can come over here. Why? Coming from the premium area, deep premium, after clearing the buy side liquid. It's in the deep premium area. So of course it can come to this discounted area. But this time over here, it was not able to come over here. But now, no problem. The more it will fall, the better it is an opportunity for me to frame the buy setup. The things I'm talking to you guys here, it's gonna be very complicated for you, some of you, because you don't know when I'm saying that it should not go over there, it should go over there. It seems like very complicated to you. When the live is done, what I actually did when ICT showed something to us in live, what I have done, later I closed after the stream, I reopened that live streaming and come to my chart to mark them by myself to understand what he meant to say. If you do that, it's called hard work. Most of us, we don't like to do that. So please do the job for me. I'm not going to do that. You please do that job for us, brother. So I'm doing that job for you, and it's not helping you to understand. What you will do, you'll after the stream, you will reopen the stream and you will mark the same thing I'm marking, and will see why how I'm saying it is going to react from one level to another level. If you do that, it will give you a huge information, understanding of the levels of the PDRS of the price action. When I was talking about here, remember I told that it should not go to the discounted area. Now I'm saying it should come over here. Why I'm saying that all of these things is going to be clear if you do that on your chart. This gap is important, remember. Reclaimed gap. I can simply take the buy over here. Here, it's a valid buy. Stop loss is going to be below this candle. Now it's going to be a bit bigger here below that candle because it's big. For example, I'm going to cover it just here, going for 1:1. I'm not taking it, just showing it to you because I'm not working with this reclaimed gap today. I'm not taking this to you. So we'll take that entry exactly to the top of this reclaimed gap. Is here. I'm going to remove this gap for now to show you the reclaimed gap. Okay, exactly the same way. Here is going to be the trade. Stop loss is going to cover this 15-minute bullish fair value gap high. We'll see 1:1, which is here. Take the partial at least. Then we'll target the all-time high. Watching. I'm not going to take it. I will frame another trade. Actually, I have another plan, but I'm just trying to show you how this reclaimed gap is going to work. Remember, stop loss is going to have put below this candle here. I'm not able to do that because the stop loss is going to be too big, something like there, 56 handle. If I'm wrong, what is going to happen? I'm going to take a 56 handle loss. So I will move it to 29 handle over here, or maybe 30 handle. Okay, 31 handle. We'll go for the 31 handle partial and then hold the trade for this buy side liquidity. Where did it come? To the deep discounted area here. Now look for a new leg here. Here, look for that new leg. Going to remove this. Even if this market would love to fall, even if it is high and the low, the equilibrium where the market should reach before falling here to the 50% of this range, even if it would love to fall. If I frame a buy here, take a partial over there, make the target over here, is that more than enough for being profitable? All I'm expecting, this market will come here for this buy side liquidity. So I know market is coming for this deep premium area. Here I have the last fair value gap. Target the last fair value gap low. Is it enough for being profitable? Even if I target it here, which is 73 handle. After taking a partial around 32 handle, I'll hold the trade for this 70 handle. Is it enough for being profitable? Look at this candle. Mark the 50% of this candle. Best order block is over here. The 50% maximum fall should happen until this 50%, because this order block 50% is a very strong level to hold the market, send it higher. Repriced the whole reclaimed gap low. Reclaimed gap low has been repriced perfectly. Nothing is wrong. All I'm waiting for and buying opportunity here. Not interested to take the sell. This one I just outlined it. Not going to take it because the stop loss is too big. I'm not able to take the stop loss over here. And if I put it here and unfortunately market stop me out, you will start to judge me. That's just because of that I'm not framing this. If I were alone, for example, I am alone, I'm trading. This is my buy over here. Stop loss is here. Partial is here. Target is this low of this last fair value gap. Going to believe nobody is going to close below this line over here. See this line? The red line, nobody is going to close below that line. If the body close, one candle is acceptable, the next candle has to close above this line. For example, I will get stopped out here. Until this low is not taken, I will try to re-enter to this market. because I know that my stop loss is tight here, not able to put it below here. So if I get stopped out, I got stopped out because of my tight stop loss. So simple, until this low is not taken, we'll take the re-entry. Got stopped out. For example, I would get stopped out here. I would wait for the re-entry opportunity until this low is not taken. If this low is taken, sorry, this low is taken, no more trade is valid from this reclaimed gap. And of course, I'll go for that trade actually, because next time it doesn't need to fall. Remember, this low is taken, no more entries valid from this reclaimed gap. Okay, this low is taken, it's not valid anymore to take the entry. All of these lines are not important anymore because it has cleared all the lows over here. Now, what do I see here? Market has cleared all the liquidity market left before the market opened. It has cleared all the buy side liquidity as well, plus leaving the buy side liquidity. Here to here, if it is going to be the low, when the first time I'll see the bullish candle, I'll show you another inversion fair value gap entry. But just remember, entry is gonna be above the 50% of this candle. It is going to fall, brother. I'm going to take the sell. It's up to you. I'm not interested to take the sell. I'm more interested for this buy side liquidity. But the first time it will start to go higher, I'll show you the inverse gap entry again. Same here, I showed you around here. So let me see actually from the hourly chart, do I have anything here or not? Have some unfinished business, that order block from the hourly chart that can be traded before going higher. This is a random level. I don't believe in this shit reversal. I'm predicting this chart to go higher again, at least until this last fair value gap. This last fair value gap is my target for the morning session. I will prefer this market to come to this last fair value gap from by the morning session. So until this last fair value gap. It is falling. It's gonna give me more opportunity to take the buy. From the 15-minute chart, I have this last fair value gap over here. This gap is not important anymore. Before the market open, it was important. It has provided what I was needed. The job is done for this gap. Not interested for this gap anymore. Would love to see, can it take that liquidity, fall for this last fair value gap before going higher, which is inside the hourly bullish order block. New buy is going to happen from here, from this mid bullish fair value gap. All this sell, I'm letting them go. I'm not interested to touch this sell because my higher time frame is telling me to go for the buy. Nothing is important for me here instead of buying opportunity. This low, if it can take this low, that is the best case of scenario, and trade this last fair value gap from 15 minutes before going higher. Plus trading the order block, that is an unfinished business. I will mark the level here, see if it can provide me any quadrant, the inverse gap entry from here to here, around here. Okay, so perfect. I'm going to remove this. Going to switch my daily bullish fair value gap from 1 minute chart to 15. This is the gap, my high probable inverse gap. I have already planned the next buy. How? If this happened, that's my next buy from here to until this area. stop loss below the candle, which is going to validate this inverse gap as a inverse gap. From here, from there, stop loss below this candle, as we have a fair value gap. That Assalamualaikum. আচ্ছা আম্মা, আল্লাহ হাফেজ. I think I'm going to miss the trade. Fortunately, I was a bit late because my mother, but so I will find another. I'm just going to miss this trade, but you already understand, right? How why this gap is important, very much important. But we'll see. Still, we'll see if it can provide me the opportunity. Until it's not reaching to this 50%. If it reaches to this 50%, entry is not valid anymore. Provide me that entry. We'll see if it can provide me the entry opportunity after closing above this candle, above this gap. So now that should be the entry. That is the partial 1:1, and we'll target the last fair value gap. From where? This inverse gap. Stop loss below that candle that has validated this inverse gap as a inverse gap. Below this here is a last fair value gap. If I could put my stop loss here, that could be the best case of scenario. I will have zero possibility to get stopped out, zero possibility to get stopped out. But as it is going to be too big, I'm going to take a risk here, giving a small portion for the market to come back and trade if it wants to do that. I don't care about that. That is going to be the 1:1 partial. Where is the target? The last fair value gap low is the target. But remember, this market can reverse from this 50%, here from the 50%. Now, after taking the partial, I'm going to put my stop loss to the break even here, because for me, it's beautiful. Now, if any of you are in this trade, please close the trade over here. It's the best area to close the trade. And it's 52 handle. Trust me, it's more than enough. It's more than enough for being profitable. If you have the opportunity to take the partial here and keep some runner until here, go for that. I don't have any problem with that. But the best area to close this trade is this 50% of this whole dealing range. Whole dealing range. As I'm expecting this is going to be taken over here, so I'm predicting this market will come to this deep premium area. That's why I'm targeting the low of the last fair value gap. But if it doesn't want to come here to take this liquidity, if it doesn't want to come here, it can start to work with the 50% of this gap, and then sorry, of this dealing range, and then it can fall again one more time. So for me, the best area is to close the trade is here. If you can't do that, take some partial here, let the runner go until here and some until there. If you don't have that, close the trade over there directly. See this bullish fair value gap? It's a very important fair value gap that should hold the market. This gap. If it failed to hold the market here, it means the first time it will close above this gap again. For example, what I'm saying, it came here, closed there, okay, and then closed above this gap again. Just think like that way without stopping you out. You have to move your stop loss below that candle. Why? Because look at this price action. This market just tap here, keep going higher. There is no down close, body close candle. What else this market can go? It will come here, trade this gap, first fair value gap, second fair value gap. It will come to this second fair value gap to build the order block before going higher, to trade that order block to go higher. So in that type of scenario, I will get stopped out to the break even. So what I'm going to do, I'm going to cover that candle low that has violated this bullish PDRA. So I'm going to cover that low just because if it wants to fall to make the what to say the order block, I'm not going to get stopped out to the break even. Instead of that, I'll get some profit over here, some kind of profit over there. I'll keep watching, okay? It'll close above this. I'll move the stop loss below this candle. This gap is very important. It can work as an inverse gap. It can work as a support gap until this level, not here, not there, until this 50%. Until 50%, this gap is important to observe it. So if this can close above this gap is going to work as a support, so a strong support. Nobody will be able to close below the constant crossmate one more time. Keep watching. If it can close above this gap one more time. So below this candle or below this gap or below the candle which is going to make it as a reclaimed gap is a safe place to put the stop loss until the 50%. So that's the time to move the stop loss after the candle close above this gap. Keep watching. Again, I repeat, this is the best area to close the trade. If you want to hold it until here, make sure most of the portion has been already closed. Since you have taken most of the partial. I need to see a body close above this gap. Look how it is reacting as inverse way. I don't like it. Before tapping to this 50%. It's just failing to break this gap. When first time it built the gap, closed below this gap, it's telling that I'm not going to go for that 50% before building the order block. And I'm not interested to see that as I'm already in this trade. I got stopped out to the break even after rejecting from this gap. Cool. At least got the partial, put the stop loss to the break even. Is that enough for being profitable? How much was that run? 48 handle. Not exactly over here. Cool. Come here. Brother, you're not giving us the boom. That's why partial is important. I didn't tell you to take the partial around 20 handle and to close the trade over there. I just told you take the partial 1:1 and then close the trade or hold the trade to see if it can provide you the extreme liquidity like it gave us here. Remember? Extreme liquidity. But this time it didn't go. I'm cool with that. I wanted to see that it didn't happen. We'll try to frame re-entry opportunity. See how this inverse gap worked? This is one of the strongest inverse gap. I was very weak on inverse gap, so I started to work on inverse gap. How can I find out a beautiful inverse gap? Look at the reaction over here. Remember this inverse gap, the low and the high, high and the low. See this line over here, the lower quadrant, mark this gap, extend it to your right. Look at the reaction from here, from this gap. Same thing I have done over here, not random, not something very here high, cleared all of the highs, low, lower quadrant, inverse gap, tap to this inverse gap, gave you the reaction. That could be the best if it could tap to the 50%. Unfortunately, it didn't do that. I also don't need to do that. However, I no, it's not the inverse gap. What I'm saying, please listen to me very carefully. I'm showing the very specific thing, brother. Not this gap, just this gap, because this gap is aligned with the lower quadrant of that range, of that leg. That lower quadrant inverse gap is important to me, not this one. It's not my inverse gap. I'm not interested to use this gap to take my buy. It can work, of course it can work, but I'm not interested to use it. Now tell me who took that buy. See this gap, how strong it was. Unfortunately, in a opposite way. So I was not able to use this gap to take my buying below this area. To trade, to trade over here, one has provided us kind of, how much was that? Let me check. One setup was 62 handle One setup was 32 handle. Is that enough for being profitable? The last fair value gap that market has traded, which is the breakaway gap, would love to see if it can close above this candle, which is one of the best order block over here. This one is one of the best order block. So my new buy is going to happen like this way. This is going to be my new buying opportunity for here until same area, upper quadrant level. If it can close above this order block, so that's gonna be the buy. Stop loss is going to be below this area, just below that candle. Target wherever, if I get a stopped out, I'm not going to put the target. If I get a stopped out, then I don't need to put it. If it doesn't stop me out, that means this low, order block low, is not going to be taken. I will go for 1:1 partial again. This is the 1:1 36 handle. This is going to be the first partial from here. Okay, I just take the entry over here. I'm not counting it from there. From here, that should be the entry. That's gonna be the partial. Target is over here. If I get stopped out here, we'll wait for the new order block opportunity until this low is not taken. Last fair value gap, order block still didn't broke, but it has closed below the constant crossment. I didn't like it. However, let's see if it can keep going higher. I can get stopped out. If I get stopped out, I'll try to look for re-entry opportunity from a new order block until this low is not taken. Not moving my stop loss, not doing anything, will get stopped out over there. Simply I'll let this go. Got stopped out. We'll wait for the new opportunity, find out another buying opportunity until this low is not taken. If this low is taken, we'll wait for the new opportunity from here to take the buy. Like the way I did it here, the inverse gap, we'll look for that inverse gap or 22 item or whatever it is. Until then, I'll look for the lowest down close body close candle to look for the order block to take the rebuy re-entry opportunity. It will close above this line one more time. We'll take the rebuy again from the same order block as the body didn't close below this low over here, below that order block low. We'll go for the same order block entry, take the buy for this and for that. If it failed to clear that low, closed above this candle one more time, which is above the quadrant level, we'll take the rebuy. I'm showing you the quadrant of a dealing range, how the dealing range quadrant level works. That's why I'm showing you how an level is gonna be very important in a very specific area. You got that point, Sophia? I have gone through all the system to show you how you can find the best order block, how you can find the best entry opportunity, best breaker block, best 22 white model, best whatever it is. But now I'm showing you the quadrant level of a dealing range which you can use to take your entry. Here, unfortunately, I got stopped out. I don't care. When it will close above this line one more time, I'll take the buy from the same order block. Same order block again. From here, stop loss below this order block. There, here is the target. Sorry, here is the target. After clearing the partial here this time, and we'll go for that target over there. Just the first time it will close above this order block again. Keep watching. I have already taken a losing trade over there, right? What was that? 32 handle, something like that. I wish it will take me. If it doesn't, that's the bad luck. If it takes me, that's my good luck. If I miss it, that's my bad luck. Just remember that. But I'm not interested to see it will keep falling. It should not fall. It should go higher. Look what I'm doing. I'm not watching this gap to think that, wow, this is a bearish market. So I framed as buy. It didn't work. Stop me out. Market was overzealous. This is December. Sometimes this shit happened. I don't care about that. But even if I got stopped out, I'm not going to start to think, wow, this gap is going to be traded and this market is going to keep falling for all of this low. No, it is a bullish market. I will try to take re-entry opportunity. Now, if it doesn't give me the entry again, that's my bad luck. But I'm not switching my bias. I know exactly where the market is going, how it is going, from where it is going. Sometimes this type of shit happened. For example, this candle didn't appear over there. What would you would see? Wow, boom. Another boom. Perfect. No problem. I can only take the entry over here or from this gap. So if I see it has built a gap, I'll move my entry here and put my stop loss below the breakaway gap. I'll show that to you in a moment. Until that 50% of the range is not going to be traded. If this 50% range has been traded, this entry is not valid. So I have missed the entry opportunity over there. Just remember that, okay? That will be the entry. Here is the gap. Two gap. One, two. Going to cover that gap low. So now the entry is gonna be from here, not from the water block, because that has done over here. We'll try to take the entry over here. If it give me, gonna be the stop loss here, covering this breakaway gap until it is not trading this line. Remember, this line has been traded. This trade is not valid. And going to take the partial over here if it give me the entry. If it doesn't, I'll let this go. Not going to chase the market. Bad luck. I will simply say that bad luck because I knew what is going to happen. Unfortunately, market didn't give me the trade. Okay, after taking that loss, I'll be cool with that. I tried this entry from the water block because the body didn't close below the water block. We did the damage, which is very normal. Then I tried to take the entry from the second fair value gap opportunity. Didn't get that opportunity. Market came to the equilibrium. Even though I know it's coming for that area, I can't enter over here anymore. I have to wait this market to take some liquidity again to give me another buying opportunity. So the first time I got the opportunity where the market has cleared all the liquidity, tried to take the inverse gap, got that boom. Then this market fall in a logical level. The best area to take the entry is from the water block plus the quarter level. Tried it, got stopped out, re-entered, failed, tried to re-enter, failed. Market is going higher. We'll wait to see any kind of sell side liquidity to be taken before going higher again for this buy side liquidity. Just to watch. I'm not thinking after even seeing this big fall, okay, this is a bearish market. No, this is not a bearish market. Why? Because you know from the 50-minute chart what is happening over here. From the 50-minute chart, you already know that all the liquidity has been cleared by this low. All the liquidity has been cleared. This is an old 50-minute last fair value gap that is holding the market over here. Here and here, this is the higher time frame bullish PDRA. They are holding the market. We have beautiful buy side liquidity there, there, here. Right now, this market has fallen to clear some liquidity at first, traded another 1 minute last fair value gap as well as this order block from 15-minute chart. Now it is reaching for the area it would love to reach, where 15-minute or the hourly last fair value gap. Until there, market is reaching for that. It's not a bearish market. I'm not interested to take the sell. All of this fall is my new buying opportunity. However, it's a 22 YT model, but not interested to catch this model because it's too big. So I'll let this go. Low, high. Where the market is trading right now, equilibrium. Equilibrium trading means this market can fall one more time to clear some liquidity. First, some liquidity has to be cleared. So what is the best case of scenario to take the buy right now? Like this, this, this. This is the best case of scenario to take the buy right now. So it will react from there make a swing low, trade a bearish PDRA, take that swing low by that run, break that bearish PDRA, whatever PDRA market has built over there, that's gonna be break, fall to a bullish PDRA, take the buy for this buy side liquidity. This is very well designed. If it happens, I'm going to enter again. If it doesn't happen, market is keep going higher. Okay, so something like that, going higher, going higher, not going to touch it. This is going to appear on the chart. I'm gonna enter into this market. If it doesn't appear on the chart, I'm not going to enter into this market, letting this go, even though I know that market is coming here, but not going to touch it. Let this go. Ask yourself, how many entries do you need to be profitable? Overtrade, don't do that. Am I talking too much, guys? Am I talking too much? Please let me know. See this reaction from the equilibrium. That's why I told that no entry is valid if you trade that 50% of this range, because if I am wrong, market is not going to take that liquidity. It can simply react from this 50% and keep falling. It is also possible, and it will keep falling, 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 falling for here. I don't care about that. I'm not going to take any kind of buy while it has already done the job. So now it's time for me to look for a buying opportunity. No, Sachin. Hello, Sachin. How are you, sir? Been a long I don't see your name, brother. How are you, man? You okay? Hey, Sophia, your talking is helpful. Thank you so much, Dora. Thank you. I'm just trying to read every kind of scenario, guys. Talk more. The best classroom I have ever had. Okay, thank you so much. But Tamimi can get angry on me because, come on. Wow, 11,497 subscriber. Just need three more subscriber to make it 11,500. Very near to my target. I think my hard work is going to pay me, and I'm gonna see 11,500 subscriber very soon. Whenever I'm in the trade, it never keeps going higher lol. You have to look for the time, brother. The time is the most important part for the speed. And if you expect some kind of uh, speed, then you have to look for the macro time, which is 9:50 to 10:10, 10:50 to 11:10, 11:50, 12:10, any kind of macro, or have to look for the run around the 30 of the hour. So 10:30, 9:30, 11:30, 1:30, 2:30, 3:30, around that area. You will get the speed. So if you are in a trade, except those times, either the macro or the 10:30 area, there is much more probability you will be inside a consolidation. If you can choose that time frame to enter, you will get the speed. In between 9:50, 10:10, 10:50, 11:10, 11:50, 12:10, 1:50, 2:10, something like that, the macro, or around 10:30, 9:30, 8:30, 7:30, 6:30, around any kind of 30 level, you will get this speed, brother. Did you learn from ICT? I tried to learn from ICT actually. Alaska, okay, 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 okay. Tamim is the worst student I've ever seen. Me too, brother. Me too, man. Me too. Tamim is the worst. I'm fine, sir. I'm just using this time to work on my weak point and adding one entry model in my trading and working with that for clarifications. That's cool, brother. See this water block, one of the best water block ever to take the entry. See this water block over here. This is the best order block to take the entry. How long? Until this upper quadrant or this fair value gap. Keep watching. I'm not marking it. You guys do it by yourself. Later I'll ask you why I called it as one of the best order block. Later I'll ask you, okay? So do it by yourself. Let's see if any of you can find it. One time I'm going to leave you alone. What did I do? Yes, Mahdi, what did he do? You have to tell that what did he do. We are interested to listen from you, brother. I'm not going to mark it. Please do it by yourself. I gave you all the logic how to find the order block, consecutive order block, everything. See, this market was bearish, right? People started to think, wow, this is a bearish market, bearish market, bearish market. Market trade the constant and cosmic equilibrium. Now it is going to fall. No, when it is falling, this is a new buying opportunity. Where did it came? Exactly. Last fair value gap, entry fair value gap. More importantly, to that level, lower quadrant, 50%, upper quadrant. See how beautifully these guys are going to work as a support. Keep watching. Did you know that where the market is going for? My question to you, did you know that how this market is going to book from one level to another level after watching me until now? Recently, you were ganging up with Sophia against me. Watch your back, dude. That is a nice trade, brother. I love it. I'm asking you a simple question. Did you know that where the market is going? Did you ever confused after seeing this run to think that it is going to fall for forever? Or did you exactly know that what is going to happen next, where the market is reaching for? Where could be our entry opportunity? How we could look for those entry opportunities? Did you know that? That's what I learned from you in past months. Importance of time. Absolutely, brother. Thank you so much. Now, again, I can't keep talking about the same thing again and again, right? If I go for the 22 YT model, if I go for the order block, if I go for the breaker block, if I go for the mitigation block, if I go for the inversion fair value gap, if I go for the rejection block, if I go for the premium discount, if I go for the MMXM, if I go for any kind of quadrant level entries, that's not gonna happen every day. I can't do that. I have to choose one specific system or a specific model to work with in a specific day. So I can't go for everything every day. So those people who are new, you have to wait for the next time I'll be back to 22 YT model or maybe order block, maybe something else. But when I'm working, why I'm working with this PDRS or this cordon levels or the discount premium things, why I came back here 2 days ago. I think 2 days, not only 2 days ago, yesterday as well. One of our viewers, one of my brother, he told that ICT concepts is just for taking entry model. That's why I'm showing you. This is not just for an entry model. It is for the reading the price. I can't be right 100% of the time. Nobody is able to do that. Nobody. If I had more monitor, I could show you 90% winning. Sorry, 90% time I would be right. Even though this is the December price action. Now, so far, whatever I showed you from this dealing range, how many times I was wrong? This is your job. Find it out. This candle low, this candle high, going to mark that gap. Here, here. Extend it to my right. Last fair value gap. Brother, I missed the buy here. I didn't take the buy here. No problem. Last fair value gap. Keep that in your mind. I'm not going to frame it. You will do that by yourself. Remember, buy side is here. Buy side is there. That is also the buy side liquidity. You will do it by yourself. I'll just write down the boom for you. 50% lower quadrant and the 50% here, watching them. Dora, if it doesn't come, you will let this go because you're not worrying about that. You know that this is coming, keep coming, right, sister? I mean, if I miss one trade, it doesn't mean anything to me because I know there is thousands more opportunities is coming for me. If I miss the trade here, I don't give a shit. I'll try to take the entry here. If I miss it here, I don't care about that. I'll try to take it here. If I failed to take the entry over here, I'll go for here. I have thousands of the opportunities to take the entry. Even if you don't worry about that, you will get your entry opportunity. But don't forget about the immediate reaction. The important thing, brother, sister. Very random, right? Did I tell that every time it will go above this line, it will work as a support? Did I tell that before it appeared on the chart? It will work as a support. But brother, it doesn't mean anything to me. From this support, from here, this support to until here, it's 37 handle, man. From this support to until here, it's 37 handle. Do you really think that's nothing? Of course, it's something, brother. No problem. If you miss it, you don't give a shit. You know that how to re-enter on this market. If you miss the trade over here, what is going to happen? You know that, brother. Come on. Here, the what happened exactly over here. Look, what happened exactly. This was that down close body close candle. Left that area here. Left that area of this down close body close candles without giving the entry. It was an unfinished business. Market came back again, trade that water block. See this area, it's an unfilled, I want to say unfilled gap here. That is an unfilled gap. I would love to see. Above this unfilled gap, this is the institutional order flow entry drill. Market trade here to this institutional order flow entry drill. More importantly, dealing range high, dealing range low, that has cleared the liquidity. That has cleared the liquidity here. 50% tap there. What is the next level? Upper quadrant. I'm expecting some kind of reaction from there. That reaction will take that low over here. This low is going to be taken by the reaction of this upper quadrant level. Something like this. Here, come here, we'll start to look for the breaker block there for the buy side liquidity. This is the plan right now for me. For example, it didn't appear or it didn't happen. Last fair value gap. Is this last fair value gap important? Anybody can tell me that. Is this last fair value gap important? Any of you can tell me that, please. Can I use this last fair value gap to take my buy? Because there is some last fair value gap I can't use to take the buy. Old bearish, old gap, that's gonna be important. For what? For taking sell. If my bias was bearish, for example, I'm expecting this low is going to be taken. This is my sell from this gap. My bias is not bearish, so I'm not going to use this gap. Yesterday I showed you this gap, remember? Old gap as a reclaimed way, take the sell. If your bias is bearish, I'm not bearish, so I'm not going to use this gap to take my sell. Thank you, Kuba. You, brother. Hey guys, please can you please push the like button, man? How many likes did I get? 105 likes. 114 likes. So can you make it 114? People are watching. The likes are watching the same. Can you please make it for me? Thank you, Suzivan. Please push the like button. Nobody is interested to. I'll be back. Hey Mahadi, how you seeing the correct dealing range in each time frame? How you sign the correct dealing range each time frame? Very easy. The 15-minute chart, right? This is the low that has cleared all of these lows. This low. This is the high that has cleared this swing high over here. This swing high has been cleared by this. This is my dealing range. That means all this price action is inside that dealing range. If you go for that dealing range, there is a new dealing range. All of this price action is inside that leg over here. This is the leg. Price action is inside that leg. So first of all, I'm interested to see this market will go higher. So what I will do, I will mark the dealing range high and the low. This is the equilibrium of that dealing range. Now, if this market really would love to fall, is not coming here, around here. But as I'm expecting market will go higher because I have the buy side liquidity. How I'm going to use the dealing range? Depending on the buy side liquidity and the sell side liquidity. I don't have the sell side liquidity. I have the buy side liquidity here and here. I have only the buy side liquidity, no sell side liquidity. What is my bias? Bullish. If my bias is bullish, I'm expecting this market will come here to this deep premium area. That is a confirmation market is going higher. So I have already find out that this dealing range 50% should be broken, come over here to this deep premium area. When I have found that, now I'm coming to the new dealing range which is inside that dealing range. Here to here, around here, okay? I'm not interested to see anybody come to this deep discounted area. For example, on that case of scenario at the beginning, not interested to see anybody come to this deep discounted area before going higher. If it come here, there is two kind of scenario. Not before this leg appeared on the chart, before this leg here, around here, okay? After clearing some liquidity, it can fall for the liquidity again for this deep discounted area. That's a different case of scenario. Like overall, I don't want to see anybody come in this deep discounted area. Instead of that, it should work with the premium or the equilibrium which is over here and keep going higher for the buy side liquidity and finally come to this previous dealing range deep premium area here. When I have find out this area and I've seen that this is the equilibrium where this market can maximum fall, this is the equilibrium, I'm going to back to 1 minute chart. In 1 minute chart, I know that this is the equilibrium. So any kind of buying opportunity above this line is my high probable buying opportunity. From 1 minute chart, I'll look for the highest high and the lowest low. Any kind of buying opportunity above this dealing range 50%. Remember 15-minute dealing range 50%. Then high probable buying opportunity. Now, what do you see over here? Market came here a very specific gap. My bias was not bearish, remember, as well as this last fair value gap sent the market lower. You are seeing this is a bearish selling opportunity, and I am seeing that this is just a reaction that sent the market lower to clear that liquidity to finish some unfinished business from the 22 YT model. Order block didn't trade, right? Dora, you didn't get the opportunity. MM, MM, what, MMMMMM, you didn't get that opportunity. It's that opportunity. Are you going to take the entry here? No. It's an late entry. Market takes too long. What you are going to do here, you let this go, will wait for the propulsion block to take your entry because you don't know how much it is going to fall. Is it going to fall for this low as well, or is it going to react from here and keep going higher? You don't know that. So here the entry from there is an highly risky entry. It takes too long to come here. What I will do, wait for the propulsion block to take the entry, or after clearing this low, this is that unfilled gap. I want to see this market will leave some portion of this gap open, unfilled gap. If this gap is filled 100%, I will wait for the breaker block entry. If it is filled by 100%, low, lower low, highest up close body close candle, tap to this body close candle, breaker block, take the buy. Highest up close body close candle. This is the two type of scenario to take the entry around here. but you can't take the entry from the order block anymore because it takes too long. After fill fill some unfinished business, last fair value gap, old reclaimed gap, fall to take the liquidity. Happy to see that, but is it going to hold that market? Does it have that much energy? I'm not sure about that. So I need the confirm entry here. Here, I don't need to worry about that confirmation. Tap here, I'm already in the buy. If it doesn't give me the entry here, I will need a confirmed entry over here, either from the propulsion block or from the breaker block. Breaker block is valid if this is filled 100%. Otherwise, I have to look for the propulsion block trade, take entry. What are you waiting for, brother? Take the entry. What did I say? Wait for your setup. I'm waiting for the setup. But brother, you wait for the setup and then market didn't give you the entry. What is the benefit of that? This is December. You are going to miss a lot of entry. But remember that called patience. You have to be very patient over here. This is not the area to push the button. It's the area to wait for the setup. Are you getting the point? Social 777, greetings from Somalia. Thank you, brother. 11,499 subscriber. 11,499 subscriber. Just need one more guy. Did you get the reply, Mahati? This gap is not important to me at all. This gap has no value to me. I'm not watching this gap. I'm watching this lowest down close body close candle. How it is going to react from this down close body close candle. This gap is important for me just to look for the breaker block. If it is filled by the wick or the body, I will start to look for a bullish breaker block to take the buy. Just because of that, this gap is important to me. I'm not expecting any kind of reaction from this gap. I'm watching this down close body close candles, not candle, candles to think about reaction. So while I'm watching the high and the low, the 50% of that mean threshold or the order block mean threshold, is it gonna stop the market sending it higher, or is it gonna be broken? Market is falling for this low over here. If it take that low, I will look for this breakaway gap to find out any kind of reaction from that breakaway gap to send the market higher again. Anytime this market will build this kind of scenario right now, anytime this market will build low, lower low, and close above the highest up close body close candle over here, it's my high probable breaker block entry opportunity. 95 times out of 100 times it will work. Remember what did I say? Until this low is not taken, anytime this case of scenario will appear on the chart. Low, lower low, highest up close body close candle is my highest breaker block opportunity. Now if it doesn't appear here, instead of that, this is gonna appear here, like this way, like that way. This is gonna be the high probable breaker block, highest up close body close candle. If because this low and lower low, see this lower low appeared. Now if it can build another thing here, that is gonna give me a better opportunity below the market. Okay, so below the market, I'll be able to catch some kind of partial, something like that. That's the best case of scenario. But if it doesn't do that, this is gonna be the high probable breaker block around here. Keep that in your mind. Later later just uh, match the information whatever I gave you. It's time for you to go to the 15-second chart again. This is the high that has cleared that high. So here 1 minute time frame is my higher time frame, and 15-second chart is my execution time frame. Okay, this high, that low has cleared this low over here. I don't know you guys can see it or not. This is the low that has been cleared by that low. This is the high that has been cleared by that high. I'm going to mark this high and that low. See this lower quadrant? I will be in 15-second chart. For the first time, I will see a body close above this line, above that line. I will look on my left to look for a bearish fair value gap aligned with this line. If I find a bearish gap aligned with this line, that's my high probable buying opportunity from the inverse gap from 15-second chart, because here 1 minute time frame is my higher time frame, not 15 minute, not any other time frame. 1 minute time frame is my higher time frame. Okay, so actually this low over here, this is the low so far. Or if it make another low, of course you will mark that low. Like for example, it has built another low, so I'll mark that low over here. So you'll just adjust it until it is not going to close above this line. I'm gonna keep it, going to move or close it, and keep it. If you have the opportunity to go to your 15-second chart, observe that inverse gap. 11,500 subscriber. Thank you so much guys to make it 11,500 subscriber. I'm really happy to see that, and I really appreciate to all of you. Happy learning, happy learning. Thank you so much guys for all of this support. Thank you so much guys. It's kind of huge accomplishment for me. Thank you, thank you, thank you, thank you, and love you all. I'll just mark it later when the job is done. This gap I'm watching here, it should not break this gap. If this gap is broken, means I have no other opportunity to take the buy right now before clearing this low. Before clearing that low, we'll have no other opportunity to take buy if this gap is broken. Thank you so much, brother. Hey, Jamil, thank you so much. Sophia, thank you, guys. Look what I'm saying. This gap is the last barrier. If it is broken, I will have no more buying opportunity. It is going to take this low, that low, because this is the last barrier. And look at the reaction from this gap. How beautifully it is reacting from this gap. Old bullish fair value gap, failed to trade it. If it could tap over here, that could be good. But however, I can keep it here and can use this last fair value gap to the new 22Y2 model. Market fall, take the liquidity, make a swing high, fall, give me the market structure shift, entry fair value gap, trade the entry fair value gap, went higher, came to the last fair value gap. Last fair value gap sent the market lower to clear this low to trade this fair value gap. Going to mark this area to find out my new inversion fair value gap from 1 minute chart. See this gap over here? This is my new buying opportunity from 1 minute chart. From here, this is a new buying opportunity. Okay, now stop loss has to be here, 37 handle. I'm not going to do it. I'm going to put it until 30 handle. Target this buy side liquidity over here. That should be the buy here. Stop loss, going to put it here. Target there after taking a partial around 1:1. It is fixed 1:1 partial. Okay, keep watching. Same inverse fair value gap I have shown you. This is the third time I'm showing this to you. The inverse fair value gap, third time I'm showing this to you. Inverse gap. Okay, partial where 1:1 here. Okay, 1:1. I think it's here. Just mark it by yourself. Not this gap, not another gap. The gap has been created with the lower quadrant. partial target can be 50% of this gap. I don't care about that actually. Yeah. Keep watching. Stop loss should be below this candle. I didn't do that because if I put it over here and if it really break this gap again, or if it go below the 50% of this gap, this low is going to be taken so far and for sure. So I would love to see the quadrant level of that wick is going to hold the market and send it higher again. So it can maximum trade until the lower quadrant body is going to close above the upper quadrant and it will keep going higher. Time to keep watching slowly and praying, keep work, please work, please work. Okay, upper quadrant has been traded. The best is it is gonna reverse from the upper quadrant. That is the best case of scenario. But if it would love to trade the 50% acceptable, body has to close above the upper quadrant. That's all I would love to see. So if it wants to trade the 50% of this week that has cleared all the liquidity, trade the fair value gap, it is acceptable to trade the 50%, but body has to close above this line. See this line? Above that line. It has to close above this line. Best case of scenario, it will tap to this upper quadrant and it will start to go higher. That is the best case of scenario. Keep watching. Partial is here, target here. I don't know it is going to hit my target or not. Until the partial, if I get that, put the stop loss to the break even, we'll see if it can keep going higher. I'm okay with that. This time, when the market is going to close above this inverse gap, I don't want to see anybody close below the 50% of this inverse gap. When the body is going to close above this inverse gap, nobody should close below the inverse gap constant crossment again. This is cut through the candle. I'm gonna cut through all of these candles because these candles fall to trade the upper quadrant of that specific wick that has cleared the low, trade the last fair value gap. Upper quadrant has been traded. First time it will close above this inverse gap. Nobody should close below the constant crossment. I need the speed now actually because it's near about 11:30. So if I fall into that lunch trap, I have to close the trade. I don't want to fall into the lunch trap. I need the speed now toward the liquidity. Lunch trap is the most dangerous thing on trading. Okay, so first I need the confirmation after closing above the inverse gap. That is the confirmation I'm going higher. When I will see that, I'll move my stop loss. Why you would you want to move the stop loss? Because this is the lunch hour is coming to me. So I would love to move the stop loss below that candle that is gonna validate this inverse gap. Not here, not here, here. Because this was predicted that market can maximum fall until the upper quadrant level. It was predicted. But when the job is done and closed above this inverse gap, I don't need to hold the trade until the here, the stop loss until here. I need speed right now. What else do you see over here? This is that daily bullish fair value gap low. Right now, this market is trading the daily bullish fair value gap low. So I want to see the daily bullish fair value gap low is going to work as a support for 15-minute candle. That means 15-minute candle is not going to close below that daily bullish fair value gap low. I don't want to see that. All the area you are seeing, I'm watching this 1 minute chart. No, I have an eye on this 15-minute fair value gap. What is it doing? I'm seeing that it is rejecting from that area Is rejecting from that area, new week opening gap, new day opening gap. Right now, what the market is exactly trading from the 15-minute chart. I'm watching that as well. Body didn't close below the upper quadrant. I'm still cool with that. It can trade the 50% or the low, but body has to close above this line. If the body close below this line, it's a low probability then. This candle close, this candle open. There is a gap up. This is a sign I'm bullish. This gap up, this is a sign I'm bullish. Over here. Body close below this line is not acceptable. Trade the 50% doesn't matter, but body close below this line is not acceptable. It is not acceptable at all. The first time it will go higher, I have to move my stop loss right now because the body has closed below the upper quadrant of that wick. That is a sign I'm going to go for that low over here. Even though I have supported the 50%, I don't care. I am going to fall. So first time it will start to go higher, I will go for the moving the stop loss. Again, if I get stopped out here by covering the lower quadrant of that wick, got stopped out, failed to take that low over here, market closed, so I got stopped out. Market closed above this inverse gap. I will take re-entry because I knew that my stop loss should below this candle. So it trade here the lower quadrant, respected the 50%, closed above this inverse gap. Will take re-entry over here. Sometimes this shit happened. The wick did the damage. I think only ICT can cover the stop loss with a very, tight way. I don't know why. I got stopped out almost every time. Okay, either way, this low is taken, so this inverse gap is not valid. We'll wait for the new quadrant level, new inverse gap. The new low, not that one. New low around here. This is still the same inverse gap, so I don't need to worry about a new inverse gap. That same inverse gap is still valid for taking the buy from the same inverse gap, because this is the inverse gap so far. So it will close out this inverse gap again. That is a new buy from that inverse gap again. But brother, you got stopped out one time. I don't care. I know that I'm going to get the boom from that inverse gap and I'm going to believe it. Shit happened. I'm going to accept that shit. No problem. Here until there. It will close above this inverse gap again. I'll take re-entry. Not because this inverse gap has been violated by here by taking this low. Not because of that. Because the quadrant level inverse gap is still over there. So weak fall. Take that low. Still it didn't trade this one. Oh man, come on. If it could trade this one, that could be the best case of scenario. But we'll see. It closed above this gap again. It's a rebuy opportunity for me. We'll go for that buy. Just need to see the body close above this line. If it close, we'll take a rebuy. If it doesn't, let this go for this consolidation. We'll say, okay, no problem. I have taken a loss. I'm just going to stop over there. Just remember, until this gap is not broken, the buy is valid. At the same time, until this low is not taken, sorry, this low is not taken over here, that low is not taken. Anytime you will see low, high, lower low, highest up close body close candle is your breaker block. So until now I didn't get the breaker block, but I have this inverse gap which has been violated one time, but going to believe it one more time to take the buy again. At the same time, guys, if you are over trading, please don't do that. You got your boom, stop over there. I am here in live streaming. I will keep framing the trade. But if you keep doing the over trading, it's not gonna help you to to build a kingdom. Okay, so stop over trading. Your trade is done. You got some boom. Stop trading over there. Then keep watching. Just enjoy the market. That's all. Let the market close here. I'm not thinking this is a bearish market. Just this is the most important part. Even after seeing this fall, I'm not expecting this is a bearish market. I know that, I believe that this is a bullish market. All I'm doing is I'm trying to let the run go to find my buying opportunity. I know that the buy is coming from until this gap is not broken. Look at the candles, how it is respecting this gap. See how beautifully it will close above this inverse gap. I'll take the buy. Close actually. Now if it tap, I'll be in the trade. Stop loss safe here. I don't need to put the stop loss here anymore. That should be the entry. Okay, it didn't take it. It will take a bit longer to reload. I mean, sorry, to show the entry. Okay, but that is gonna be entry. Okay, you please don't get confused. That should be the entry. And partial is 1:1. You can see 32 handle. So partial is going to be 32 handle here somewhere. Okay, that's the entry. Where is the partial? Or there. Just remember before the lunch hour. Okay? I will let this go. Bye. Yeah, Sujivan, this is really so difficult for me to outline this volume imbalance as well. You can see here, there is a volume imbalance as well here, and there is a volume imbalance as well. Okay, most of the time, as I told before, I'm not good at volume imbalance. I'm not good at volume imbalance. While I do, I look for the candle to candle most of the time. I look for the candle to candle. It's easier for me because volume imbalance is very much confusing for me most of the time. I'm not good at volume imbalance. If you watch ICT himself, he can use the volume imbalance so beautifully. I'm not able to do that. So what I do, I go for the week to week to find out my PDRS. Sometimes if I see the gap is very small, but I'm interested to use that gap by any reason or for any reason, in that type of scenario, I love to add the volume imbalance. But okay, so if you look for this volume imbalance, I think now it is valid as an inverse gap. Okay, so just keep it like that way. So if it tap to this gap now, maybe it will be your entry opportunity. I'm really, let's see if it can give the entry right now or not. Okay, I don't know it will give the entry or not. Best hope for the best that it will tap over here. I'm not good at volume imbalance. I love to week. So let's see if it can provide the entry or not. How do I learn from you? How do you learn from me? Good question, by the way. Mm, how can you learn from me? I'm gonna keep it over here, okay, guys, please. Suzy one. Otherwise, I'll get confused, brother. It's just what to say. I mean, I don't know what to say. So this is gonna be the buy. So first time I took the buy here, that is a loss. Do I really care about that? Am I going to think that no, it's not going to work? No, sir. I'm not doing anything over there. I'm gonna believe the same thing again. Sometimes shit happens, and when the shit happened, I'll let this go. And then I will go for the next opportunity, go for the same logic, same thing, again, and again. Sometimes this shit happened and I'll let this go. Maybe I wouldn't get the entry opportunity over here. I really don't care about that. If I wouldn't get the opportunity over here, I would let this go. Okay, I'm not going to take this trade. Simple. By the way, I would love to add this volume imbalance just to see if it can take the entry, give the entry from with the volume imbalance. Because Suzivan has told about the volume imbalance. So I would love to see that if it can provide the entry opportunity after the volume imbalance closing above the volume imbalance. Yeah, that could be the entry. That could be the entry. You take the entry from the volume imbalance, that could be the entry. That could be the entry. Remember the old volume imbalance? Here, gap up. Why this market is working a weird way. Not fall now. Oh, okay, it's 11:37. Did I frame my trade after 11:30? I didn't notice the time actually. That candle was okay, 11:32. Sorry, I didn't notice the time actually. The time was that entry was inside the lunch hour. No trade is valid inside the lunch hour. I'm so sorry because I didn't notice that it's already lunch hour. I didn't notice that. That's why I was worrying why it is working as a weird way. Should come here to the 50%, but it's not coming to the 50%. It's reacting from there. Come on, man. Sorry, that candle was my entry, I guess. I think I pushed my button before the lunch hour, if I'm not wrong. Yeah, that was the losing trade. It was 11:32. My mistake, sorry. This entry is not valid. That will be the loss, and I will stop over here after taking that loss. Because 11:30 to 12:50, no trade is valid. If you avoid this small portion of the time frame, 11:30 to 12:50, you will easily avoid thousands of the losing trade. Thousands of the losing trade if you can avoid the 11:30 to 12:50, because lunch hour is a trap hour to fill you in a trap. However, if I go from the beginning for today's market, you don't even need to trade over there. First entry opportunity was over here, which we didn't take because it was before the launch, sorry, before the news. Then there is a entry that was more than enough for being profitable. Remember the entry from here, from there to until here 62 handle, something like that. That entry is more than enough for being profitable. Just first trade. If you miss that trade, there will be a new opportunity. Maybe you'll take the partial and you'll get stopped out to the break even, which was 32 handle. Perfect. This entry was absolutely a shit because of December. In other time, you are not going to get stopped out over here. I promise you, brother. This order block is gonna work so beautifully over here, so beautifully. All of these things you are seeing here because of this December month. Otherwise, you wouldn't get stopped out over here. It would be so beautiful, will be so beautiful, and it will be so precise. However, that run is also valid. And finally, this inverse gap didn't work. There was a much, I mean, perfect logic not to work, because first of all, it fall here, trade this gap, went higher, trade this inverse gap over here, and then fall one more time to take that liquidity, acceptable. But this time should not come back again and stop me out. However, is the lunch hour. If it was not the lunch hour, maybe I wouldn't get stopped out and it would keep going higher. No trade is valid in between 11:30 12:50. Come back again 12:50, you'll find a better opportunity. for the buy side liquidity, which is here. That is the buy side liquidity this market will look for. Today's job is to market come here to this gap. So remember the low of this gap, 25,490 is the low of this gap. Today, this market is coming here, 25,490.75. That is the area where the market is reaching today. Okay, today. So overall, that is the trade for today. It's not for all of you to take all of these trades. You are not going to take all of these trades. Trust me, you are not going to take all of this trade. You will go for one trade only. Just one trade. Either you will go for this trade, you will go for that trade, or you will go for this trade. Any of this trade, you will take one trade, just one trade. That's a winning trade. You are going to stop trading over there. No more trade is valid. Every single trade will give you a winning position or winning enough for winning. 15-minute chart with consolidation over here, in between this new week opening gap over here, reacted from there, fall, trading the low of the bullish fair value gap from the daily chart. It's just working in between this area. You are seeing this, I got stopped out over here, right? Forget about that. This entry I got stopped out. I'm okay with that. But this trade from here, when I entered to this market, to the top of this gap, until here, it was 25 handle. More than enough for being profitable. More than enough. I'm just trying to show you 1:1 and hold the trade for so long. But if you want to be a winning trader or make the payout, took the entry. Maybe you took the entry over here, you got stopped out. Go from the beginning. You took the trade here, okay? Around here, you took the trade. Forget about everything. You took the trade here, and that is the buy side liquidity where you are expecting this market will go. It was very obvious. Forget about that as well. You took a partial around 20 handle, closed the trade around 30 handle, 25, 30 handle. Just do that like this way. You took the trade here, here, go for 20 handle partial, 25 to 30 handle, you closed the trade. Maybe you took the trade here to the top of this candle, around here to the top of this candle, and you got stopped out here. You took another loss here, no problem. You will try to take a re-entry if you find that re-entry. Congratulations. If you don't find it, and that trade from after getting stopped out over here, you took the next trade. Think like it's in not the lunch hour. Here, here. Take a 20 handle partial, go for 30 handle or something like that. If it provide you that, close it over there or get stopped out around break even after taking the partial around 20 handle. Be happy with that. It's more than enough for being profitable if you stop after, if you don't do the overtrade. If you keep doing the overtrade, you will keep losing the money. The more you will overtrade, the more you will be slow for being or for getting the payout. This is my only request. Don't overtrade. Keep it simple. Take a winning trade. Stop over there. For one person, it's not possible to catch every single one of this run with the same rules. There is a lot of space where I have to go to 15-second chart. All of this run, I have to go to the 15-second chart to find out an entry opportunity. You have an permission to go to the 15-second chart. I got stopped out here, right? Here, that was the first trade I got stopped out. Around here. Go to your 15-second chart. Look here. Do you have any inverse gap? If you have any inverse gap, forget about this 1-minute chart. It's gonna work 100%, but I'm going to remove it. Exactly over here. 15-second chart will give you a boom. Confirmed boom. You will get it from 15-second chart. Don't believe me? Check it from here. Then market came here, around here, made a new low. Around here, 15-second chart will give you a boom over there for sure. Go and check. Why I'm saying that? Because from 15-second chart, your stop loss is gonna be very small. So wherever your target is, stop loss is gonna be very small, because stop loss is gonna be below the candle which has validated the inverse gap as a valid inverse gap, below that candle. So it's gonna be 13 handle, 14 handle, something like that. And you will get at least 1:1 partial, and target can be higher wherever it is. Same thing happened here. Same thing is going to happen here from the 15-second chart. If you don't believe me, just take it. However, I hope this guys, it's gonna be a bit insightful for you. Sometimes this shit happened, but most of the times on February you are not going to see this, and we are not going to trade over here. We are going to catch all of these runs. We knew how it is going to, how to catch those runs. Look at this gap. Still now how beautifully it is reacting. This gap. My bias was not bearish. Otherwise, I would frame my sell from this gap. Whenever I would get the opportunity, I would frame the sell from that gap, reclaimed gap. However, is not important because our bias is bullish. We know that market is going for this buy side liquidities. When the market is going for that buy side liquidity, the most important level is the last parallel gap. This market is not going to fall until it is not going to close below this gap, a very specific gap. This gap is not closed, this buy side liquidity is going to be taken. However, if you find any opportunity after the M session, sorry, lunch hour, try to go for that trade. Don't overtrade, please. Anybody has any question? If you have, let me know. Otherwise, I'll just close the stream. Worst day for me this December. Why is that, don't you? You said you will continue to frame trades. We told you it was 11:30. Okay, I didn't see, brother. I didn't see that you told me it's 11:30 a.m. I was not reading the chat actually. I was watching the market only. I didn't read your chat, brother, unfortunately. Abhishek, inside Tito's channel, there is a video folder called study folder. You can learn about ICT concepts from the videos inside the study folder. Good luck. I think you're talking to someone else. No problem. Anybody has any question? If no, then I'll close the stream actually for today. We'll see if I have found something around the PM session. I'll talk about that. But remember, today's target is this line. So I'll come later and I'll tell you. I told you 25,490.75. That's the line this market is going for by today. I'm interested only for that line. If it keep falling, I'll let this go. I'm not interested to touch this market if it keep falling. I wanna see it will come at least over here. When it will be here, I'll tell you later to my Discord. I told you 25,490.75. What do I mean by that? It means every single time it will take the liquidity, look for the buy. Let this run go, take that run. Let this run go to take that run. Let this run go to take that run until the liquidities are not going to clear and market is not reaching over here. If you see, market came here before the lunch, sorry, before the PM session, you have to start look for the dealing range again, and the way I showed you, look for the liquidity to go for the next bias. If it come here before the PM session, I just don't have the time to go all of these things. Thank you so much. I don't think so anybody has any questions. I'll take the closing now. See you tomorrow, okay? Don't overtrade, don't over leverage. Go slowly, be happy. By the way, Epic's last day for the 90% discount. Any of you are interested, please use the code T. See you the next time. Until then, cheers.